In vendor master, now we can go for purchasing. Under the purchasing, the first topic, purchasing data. Under the purchasing data, the first field, purchase order currency. What is it? Purchase order currency is the currency in which the PO is issued to the vendor. PO is nothing but purchase order. This currency controls how prices are entered, how calculations are done, how the vendor is paid, where it is appears. You can see it in vendor master, purchasing data, purchase order header, and conditions in pricing. If the vendor master, this currency is usually a default value, but it can be changed at PO level. Function, the purchase order currency determines the currency used for item prices, currency for taxes, discounts, freight charges, value posted in SAP MM, foreign currency conversion if different from company code currency. Example, the company code currency is INR. The vendor currency is US dollar. PO is created in US dollar. Item priced in US dollar. SAP converts US dollar to INR during posting using exchange rate. If vendor is domestic, PO currency is usually the same as company code currency, example INR. If vendor is foreign, PO might be issued in foreign currency such as US dollar, euro, Japanese yen, British pound, like that. SAP then uses exchange rates to convert values from this different currency to INR. The very simple meaning, the purchase order currency tells SAP in which currency the PO is created and the vendor will be billed. The next field is terms of payment key. What is it? The terms of payment key defines the payment conditions agreed with the business partner. Here business partner is nothing but vendor or customer. It determines when payment is due, cash discount eligibility, installment rules if applicable, where it is used. You will see it in vendor master, customer master, purchase orders and sales orders. Accounting documents like invoices, credit memos. The purpose of the terms of payment key. The terms of payment key helps SAP, the number 1, calculate the due date. Number 2, determine cash discount periods and percentages. Number 3, control payment processing and scheduling. Number 4, ensure consistency with the business agreements. So these are all the examples. Key number 001, pay immediately, no cash discount. 002, 2% discount if paid within 10 days, net in 30 days. 003, net due in 45 days. Is that 001? Customer specific payment rule. Example calculations. The terms of payment, 2% discount if paid within 10 days. If you paid within 30 days, you need to pay the net amount. The invoice date is 1st January 2026. Discount valid until 10th January 2026. Net due date 31 January 2026. If you pay within 10th January, you can get 2% discount. So if you pay within 31st January, you need to pay the entire amount, net amount. SAP computes these automatically based on the key. How SAP determines it? The priority order. In document level, PO or invoice. Number 2, if blank, vendor or customer master. Number 3, if blank, company code default settings. Very simple meaning. Terms of payment key tells SAP how and when the vendor or customer must be paid, including discount and due date rules. The next, Incoterms version. What is it? Incoterms version tells SAP which edition of the international Incoterms rules is being used in purchasing or sales documents. Incoterms are global commercial delivery terms published by the International Chamber of Commerce, ICC. They define responsibility for transportations, transfer of risk, who pays freight, insurance, handling charges, etc. Why this version is needed? Incoterms are updated every few years, for example 2000, 2010, 2020. The rules may change between versions. SAP needs to know which rule set applies to the PO, sales order or contract. For legal and compliance purposes to avoid confusions during logistics and shipping. So, where used, you will find Incoterms version in vendor master purchasing, customer master sales, and purchase orders, sales orders, delivery documents, and billing documents. So the next one is example. Let's say vendor PO uses Incoterms FOB, Incoterm version 2020. This means SAP follow the 2020 ICIC rules for FOB. Very simple meaning. Incoterm version tells SAP which year's international shipping rules apply to the transactions. Example either 2010 or 2020. So the next one is Incoterms. What is it? Incoterms in SAP represent the standard internationally recognized delivery or shipping term agreed between the buyer and the seller. So the Incoterm is nothing but standard internationally recognized delivery or shipping term. Short form we used to call as Incoterms. Example include EXW, EXWorks, FOB, free on board, CIF, cost, insurance and freight, DAP, delivery at place, FCA, free carrier, CPT, carrier paid to. These are all the examples. This field usually contains the 3-letter Incoterm code. Purpose: Incoterm defines who is responsible for transport, who pays freight, insurance, duties. Point where risk transfers from seller to buyer. It helps avoid confusion in international trade. Where it is used, you will find the Incoterm in vendor master purchasing data, in customer master purchase orders, sales orders, deliveries and billing documents. So the relationship Incoterms in SAP are generally split as part 1 and part 2. Part 1 is Incoterm code, example FOB, CAF, EXW. Part 2, which is nothing but location, example Chennai port, Mumbai warehouse, like this. So here part 1 is FOB. What is meant by FOB? Free on board. Part 2 is Chennai port. The Incoterms CIF meaning seller pays cost, insurance and freight up to the destination port. This is called CIF. Risk transfers once goods are loaded. Very simple meaning, Incoterms is the standard 3-letter trade term that defines delivery and shipping responsibility in international or domestic businesses. The next field is identifier for Incoterm location 1. Identifier for Incoterm location 1 in SAP is a field used to store a short code or identifier referencing the first Incoterm location applicable to the transactions. Meaning, it helps the system link a standard identifier like a code to the physical locations entered as a Incoterm location 1. This identifier ensures consistent reporting, processing and interpretation of location data where used in sales order, purchase order, delivery, billing documents, etc. Works together with Incoterms part 1 and Incoterm location 1. For example, the Incoterm part 1 is FOB, free on board. Incoterm location 1 is Chennai. Identifier for location 1 is CHN. Purpose: standardized location references, supports EDI communication, useful for logistics and custom reporting. The next field is Incoterms location 1. Incoterm location 1 in SAP is a field used to enter the primary location associated with the selected Incoterm for a sales or purchasing transactions. Meaning, Incoterm location 1 specifies the main place where risk or responsibility transfers between buyer and seller based on the Incoterms. Where it appears, you will see the field is sales order, purchase orders, deliveries, billing documents, vendor and customer master data. So this example, Incoterm FOB, the location is Chennai port, meaning seller responsibility ends at Chennai port. CAF, location is Mumbai, seller must deliver to Mumbai port and cover cost plus insurance. up to Mumbai. EXW Bangalore factory, the location. Buyer picks up goods from seller factory. So here buyer is the responsible from picking the product from the factory locations. So like this, based on the Incoterms, the responsibility will change. Purpose helps identify the exact place where logistics responsibility changes, ensures consistent legal and shipping interpretation, required for international trade compliance, customs and EDA. The next field is identifier for Incoterm location 2. Identifier for Incoterm location 2 is a technical or system field in SAP used to store a short code reference for the secondary Incoterm location. The meaning, this field contains a key or short code representing the second location related to the Incoterm, usually defined as final delivery location or destination city or detailed receiving point. It works together with Incoterm part 1 like FOB, CF, EXW. Incoterms part 2, description text. Incoterms location 1, first major location. Incoterms location 2, detailed or final destination, often required for ICC 2020 terms. So here the example, Incoterms DAP, location is Chennai, identifier for location is TC001, location 2 is Amazon Fulfillment Center Block 2. Why it exists? Some countries and shipping rules required two levels of location detail such as port plus warehouse, venue plus building, city plus facility code. Instead of retyping the full location again, SAP allows a short reference that maps to the detailed locations. Where it is used, you will see this field in sales order, purchase order, delivery and shipments, vendor and customer masters. The next one is Incoterm location 2. In Incoterms, a location refers to the physical point where the responsibilities of the seller and buyer change. Location 1 usually the seller premises or point of dispatch or shipment. Location 2 usually the buyer's premises or destination point where the goods are delivered. So Incoterms location 2 is the place agreed upon in the sales contract where the seller's responsibility ends and the buyer's takes delivery of the goods. Example, if the term is DAP, delivery at place, location 2 is the place of delivery at the buyer's site. How to fill Incoterm location 2 in a document SAP system? So the field is Incoterm. Example, FOB, CAF, DAP, EXW. Incoterm location is point of shipment, seller's factory or port. Incoterm location 2, destination point, buyer's warehouse, port or city. This is how you need to fill up the data. Example, Incoterms DAP, which is nothing but delivered at a place. So the location 1 is Chennai port, location 2 is Bangalore warehouse. So in SAP SD module, you enter this in the sales order shipping tab Incoterm. The location 2 field should match the delivery address of the customer or the agreed drop off point. So here you can see the difference between location and location 2. Aspect definition, point where goods are handed over by seller, usually shipment. So the location 2, points where goods are delivered to buyer, responsibility transfer. Responsibility, seller's responsibility starts, seller responsibility end. Risk is with seller until this point, depends on location. Risk passes to buyer, depends on location, depends on Incoterms. Example, seller's factory or port, buyer's warehouse, port or city. So this is about Incoterms location 2. The next field is minimum order value. Minimum order value refers to the lowest amount a customer must purchase from a seller in a single order for the order to be accepted or processed. It commonly used in sales, e-commerce and B2B transactions to ensure profitability and manage logistics. Key points. The number 1, definition, the minimum monetary amount required per order. Sometimes instead of amount we can use minimum quantity. Number 2, purpose, ensures the sellers covers processing, shipping and handling cost, encourages large orders for economies of scale, helps filter small and profitable orders. Number 3, how it is applied. Example 1, minimum order value is 500. Any order below 500 cannot be placed. Example 2, 10 units. Customer must order at least 10 units per product. Number 4, difference from minimum quantity. Minimum order value is equal to based on the total order price. Minimum quantity equal to based on number of items regardless of price. Number 5, use in system like SAP e-commerce can be configured in pricing or sales order checks, alerts customer if order is below to the MOV, minimum order value. The next field is responsible salesperson at the supplier's office. Responsible salesperson at a supplier's office refers to the specific person at the supplier's side who is accountable for managing the sales process for a particular customer or order or region. This is commonly used in sales ERP systems like SAP and purchase or sales documentations. Key points. The number 1, definition. The salesperson officially assigned by the supplier to handle inquiries, orders and coordination with the buyer. Act as a point of contact for the customer at the supplier's office. Number 2, roles and responsibilities. Receiving and processing sales orders and communicating with customer regarding price, delivery dates and order status, and coordinating internally with the production, logistics and finance to ensure smooth order fulfillment, resolving issues like delays, quality concerns or returns, maintaining customer records and reporting sales performance. Number 3, usage in system in SAP. In SAP SD sales and distributions, this is often called salesperson or sales employee linked to the customer master or sales order. Helps in tracking sales performance, commissions and responsibilities. Can be used for workflow approvals if the salesperson need to authorize orders. So these are examples. Difference from salesperson to buyer's office. Difference from responsible salesperson at buyer's office. Responsible at supplier, responsible at buyer. Manage the order from the supplier side, manage order on buyer side. Ensures delivery, billing and order fulfillment. Ensure order placement, payment and feedback. Coordinates internally at supplier, coordinates internally at buyer. So these are all the responsibility at supplier end and buyer end. So the important tips. Always enter the full name and employee ID if applicable in documents and ERP system to avoid confusions, especially in multi-office suppliers or large organizations. The next one is supplier's telephone number. Supplier telephone number is simply the contact phone number of the supplier or vendor used for communication regarding orders, delivery, payment or other business inquiries. Key points. Number 1, the purpose enables the buyer to contact the supplier quickly for order confirmations, shipment, tracking or issue resolution. Often required in purchase orders, contracts, shipping documents or ERP systems. Used for emergency communication, especially if emails is delayed. Number 2, format include country code for international suppliers. Example, domestic India. So we start with 044 country code and you can enter the telephone number. Example, international USA. You can start with +1. Then you can enter your telephone number. Where it is recorded, purchase order, vendor master in our SAP system under the MM module, supplier contact list or business directories, shipping and billing documents. These are all the use cases. Best practice. Number 4, keep the number up to date, check periodically, include a secondary number if available, example mobile or department line, specify extension numbers if needed. The important tips. In system like SAP, the supplier telephone number is stored in the vendor master address communication. This ensures automated communications for order confirmations or alerts. The next one is our account number with the supplier. Our account number with the supplier refers to the unique identification or account code assigned by a supplier to your company. This is used for billing, payments and tracking transactions between your company and the supplier. The key points, there are 4 key points. Number 1 is definition. When your company registers as a customer with a supplier, the supplier assigns a unique account number. This number identifies your company in the supplier's billing, invoicing and ERP systems. Number 2, purpose. Ensures all invoices, payments and orders are correctly linked to your company. Helps the supplier track your credit limit, payment history and outstanding balances. Then facilitates efficient communication regarding order statements or disputes. Number 3, where it is used. Purchase orders often referenced to indicate which account the invoice should be billed to. Invoice and statements helps supplier match payments and orders correctly. ERP systems stored in vendor or customer master data, automated processing. Number 4, example. Your company ABC Private Limited, supplier XYZ Electronics. Supplier assigns account number XYZ ACC 1023. All invoices, credit notes or payments will reference this XYZ ACC 1023. Number 5, best practices. Keep a record of all supplier account numbers to avoid confusion if your company deals with multiple suppliers. Always verify the account number or invoices before making payments. Include the account number in purchase orders when required. Tips in SAP system like in Vendor Master Purchasing Data tab, this is often stored as a customer account number or reference. Helps automate payment reconciliation and reporting. The next field is ABC indicator. The term ABC indicator is commonly used in inventory management, procurement and ERP systems like SAP. It is part of ABC analysis which classify items, suppliers or accounts based on importance, value or consumptions. So the ABC always classify based on the items or based on the suppliers or based on the accounts, or based on the value or based on the consumptions. There are different parameters to use this ABC analysis. The definition, ABC indicator assigns a category A, B or C to an item or supplier or account. The purpose helps prioritize management focus, procurement efforts or stock control. So how items are classified? For example, category A, high value or high importance. So focus, tight control, frequent review, accurate forecasting. B, category B, medium value, medium importance, moderate control, periodic review. Category C, low value, low importance, minimal control, bulk handling, low priority. So the practical example, the material laptop annual value is 15 lakh rupees. The ABC indicator is A. Second one is printer, 3 lakh rupees. Category B. And third example, mouse annual value is 30,000 rupees. Category C in ABC indicator. Let's say classifications can be based on monetary value, consumption value or criticality. Example, in inventory, total annual consumption is 1 lakh units. Item contributing 70% of value is A category. Item contributing 20% of the value is B category. Item contributing only 10% of the value is C category. Usage in SAP. In Material Master MRP 1 or MRP 2 tab, enter the ABC indicator informations. So procurement and stock management. A items procurement stock checks tight inventory levels. B items standard control. C items minimal control, large safety check. Reporting and planning. Enables prioritizing purchase planning, vendor negotiations and inventory audits. The tips, ABC analysis is a dynamic review periodically because consumption patterns change over time, which can change the ABC indicator. So the ABC indicator is a dynamic entity. It will change frequently. So you need to review the system periodically. Then based on the current status, you have to change this ABC indicator. A can change into B, B can change into A, or C can change into A sometimes. So you need to review periodically. Based on the current requirement, you need to change this indicator levels. The next field is shipping conditions. Shipping conditions refers to the specific items or requirements or rules agreed upon for transporting goods from the seller to the buyer. This includes how the goods will be shipped, who is responsible for cost and risk, and any special handling requirements. So the definition is defines the method, responsibility and conditions of shipping per an order. So generally used in sales orders, purchase orders, contracts and SAP SD or MM modules. So this is example. So the element is delivery items, indicates whether delivery is standard, express or partial. Mode of transport, air, sea, road or through train. Packing requirements, special packing needed for fragile, hazardous or perishable goods. Responsibility risk, who bears cost and risk during shipment, often linked to Incoterms. Route or carrier, preferred carrier or shipping route if specified. Insurance documentations, any requirements for shipment insurance or export import documents. So these are all the key elements in the shipping conditions. Examples of shipping conditions: the standard delivery, delivered within 7 to 10 business days via ground transport. Express delivery, delivered within 2 to 3 business day by courier. Partial delivery allowed. The supplier can deliver in multiple shipments if stocks is insufficient. Hazardous material handling, special packing and documentation required. So the fourth one is usage in SAP. In SAP SD, shipping conditions are maintained in the sales order shipping tab. So they help determine route determinations, delivery scheduling and then transportation planning. Example, in SAP 10 is the standard delivery, 20 is the express delivery, 30 is the customer pickup. So the important tips: shipping conditions are closely linked to Incoterms, delivery priority and transportation planning. So make sure they are consistent across your sales order, contract and logistics documents. So this shipping condition is very important because it is linking multiple datas in your sales process. So the next field is indicator GR based invoice verifications. In GR is nothing but goods receipt. Is a term commonly used in SAP material management module for procurement and invoice processing. Let's break it down clearly. The definition: GR based invoice verification means that the invoice from the supplier can only be posted after the corresponding goods receipt is recorded. This ensures the payment is made only for goods actually received. Indicator: this is usually a checkbox or field in SAP that signals the system to enforce GR based invoice verifications. So the purpose: prevents overpayment or payment for goods not received, ensures accuracy in inventory and accounting, supports audit compliances and financial control. So how it works in SAP: create a purchase order, receive the goods, which is called post goods receipt, GR. Supplier send invoice, post invoice verifications, IV. SAP allows invoice posting only in GR exist. Fifth one is payment is then processed to the supplier. So there are 5 steps. First one, create a PO. Second one, receive the goods against our PO. Third one, supplier will send the invoice. So you have to verify the invoice verifications. Then SAP allows invoice posting only if goods receipt exist. The fifth one is payment is then processed to the supplier. So in SAP, in the PO items invoice tab, check GR based IV. If unchecked, invoices can be posted without goods receipt. So example scenario: PO 100 units of material X from supplier A, goods receipt 80 units received and posted in SAP. Invoice: supplier send invoices for 100 units, Result with goods receipt based invoice verifications. SAP allows invoice only for 80 units received, preventing overpayment. Okay. So the tips is GR based invoice verification is mandatory for high value or regulated items, but for low value or service items, sometimes non-GR based IV is used. But most of the items coming under GR based IV. So here the key concept: term, goods receipt, GR, confirmation in SAP that goods have physically arrived at the warehouse. Invoice verification, step in SAP MM where the supplier invoice are posted and matched against PO, purchase order and goods receipt. So three-way match: SAP checks purchase order, goods receipt and invoice before allowing the payment to the supplier. So this is also very important field. So the next one is indicator whether discount is kind grant. Indicator whether discount is kind granted is a field used in sales procurement or accounting systems like SAP SD or MM module to record whether a non-cash discount, example goods or services instead of cash, has been given by the supplier or granted to the customer. So the definition is a discount in kind refers to giving goods, services or benefits instead of a monetary discount. The indicator is a checkbox or flag that marks whether such a discount applies for a particular transaction. So the purpose ensures proper billing and accounting for non-cash benefits, differentiates between the monetary discounts, example 5% offer, and goods or services provided free or extra. Helps in tax calculations and complaints reporting. So the scenario: supplier sends 100 units but 5 extra units are free as a promotion. Checked discount in kind granted. Customer receives 10% of invoice amount. Unchecked cash discount not in kind. Supplier provides free packaging or accessories along with the main order. Indicator is checked. Usage in SAP: SAP SD sales and distribution, found in sales order conditions tab or billing document. Setting the indicator ensures the system calculates price and tax correctly. Reporting used to track promotions, freebies or incentives. The key points must be carefully set because it affects billing, total value of invoices, and number 2, inventory. If goods are given free, stock reduces. Number 3, tax reporting. Non-monetary discounts can have different tax treatment. Number 4, usually applies per item or per document depending on system configuration. The important tips: always verify with your finance or accounting policy whether a transaction qualifies as a discount in kind before checking the indicator, because it has both inventory and tax implications. So sometimes you can receive the product. For example, if you are purchasing laptop, you can get mouse as a free accessories, or sometimes you can purchase a laptop, you can get mouse with the 50% discount. So there are like this different scenarios. Based on the scenarios, you need to check with your finance and accounting policies and you need to set up this indicator very carefully. The next one is profile for transferring material data via IDOC ProAct. The profile for transferring material data via IDOC ProAct refers to a configuration setup in SAP for transferring material master data from one system to another using an IDOC intermediate document, specifically the ProAct IDOC type. Let's break it down clearly. The number 1 definition: IDOC, which is nothing but intermediate document, standard SAP format for data exchange between SAP system or between SAP and external system. The ProAct refers to a specific IDOC message type used for material master data transfer. Profile: in SAP, a partner profile defines how data is sent, received and processed for a specific IDOC type and partner. So the profile defines which message type is used, how the IDOC is processed, which partner system receive it. So key components of the profile: number 2, The component message type, the description is ProAct for material master. Partner type, example LS logical system, KU customer, LI vendor. Partner number, ID of the receiving system or partner. Process mode determines how the IDOC is processed, example create, update, material master. Output type and port specifies the transmission method, ALE, RFC or file. Direction, inbound or outbound. Inbound means receive, outbound means send. So the number 3, purpose, to transfer material master data like descriptions, units, classifications, valuations from one system to another system. Ensures data consistency across SAP system, for example development, production or testing, or from SAP to non-SAP. Automates material master update without manual entry. So these are all the purpose to use this IDOC ProAct. How it works: create or update material in the sending SAP system. Number 2, SAP triggers IDOC ProAct based on the partner profile configuration. Number 3, IDOC is sent via ALC, RFC or EDI to the receiving system. Number 4, receiving system process the IDOC, update its material master automatically. SAP transaction involved. So W20 partner profile setup, WE21 port definitions like RFC, file, etc. BD64 distribution model for ALE, WE19 test IDOC. So the number 5 example scenario: company has 2 SAP systems, development system and a production system. A new material is created in development system. Outbound IDOC ProAct is triggered to send material data to production system. Production system receives and updates its material master automatically. The important tips: always test ProAct IDOCs in a sandbox system. First, because errors in material master data transfer can affect production inventory and procurement processes. So initially you need to test in the development server, then you need to transfer the data to the production server. So otherwise it is going to affect the production system managing the inventory and procurement process, so due to the error. So the next field is indicator for service based invoice verifications. The indicator for service based invoice verification is a field used in SAP MM material management and service procurement to control how invoices for services are verified and posted. Let's break it down clearly. Number 1, definition. When this indicator is set, it tells SAP that the invoice verification is service based rather than material based. This means the system checks service entries via service entry sheet before allowing invoice posting, commonly used for purchase orders for services instead of goods. The number 2 key concept: service entry sheet, generally we used to call as SES, document created by the receiver to confirm service performed. Then invoice verifications, step where supplier invoices are posted in SAP. Then service based IV, SAP allows invoice posting only after SES is approved. So number 3 purpose: ensure payment is made only for service actually delivered, avoid overpayment or incorrect payment for services, supports audit compliance and proper accounting. So the number 4, how it works in SAP: create a service purchase order in SAP. Number 2, service provider performs the service. Number 3, receiver creates a service entry sheet confirming the work done. Number 4, invoice from the service provider is received. Number 5, SAP allows invoicing posting only if SES exists in and is approved. So service entry sheet is very important in this entire process. The indicator found in PO, invoice tab, service based IV checkbox. If unchecked, invoice can be posted without SES, not recommended for services. Generally not recommended for this service related business. Example scenario: PO 10 hours of IT consultancy at 1000 rupees per hour. Service entry sheet 8 hours completed and approved. So invoice received for 10 hours. So the purchase order received for 10 hours, 1000 rupees per hour. In service entry sheet, which is nothing but actual work is done for only 8 hours, that 8 hours only approved in service entry sheet SES. Invoice received for 10 hours. With service based invoice verification indicator, SAP allows posting for 8 hours only, preventing overpayment. The important tips: service based invoice verification is mandatory for service POs, especially in outsourced services, maintenance contracts or consultancy, because there are no physical goods receipt like a material based IV. The next field is indicator supplier subject to subsequent settlement accounting is a field in SAP material management and accounts payable used for suppliers whose invoices are handled under special settlement procedures, typically related to down payments, advances or long-term contracts. Let's break it down one by one. There are 3 stages. Number 1 is definition. When this indicator is set, the system knows that the supplier's payment are not final at the time of invoicing. The supplier account is subject to subsequent settlement, meaning the invoice or payment will be adjusted or settled later. Common in scenario like construction contracts, long-term service agreements, advance payments. In these scenarios, you need to apply this indicator. The number 2 purpose: to track advance payments, progress payments and final settlements separately. Ensure correct accounting and reconciliation. Prevent double payment or posting errors in SAP. Number 3, how it works in SAP system. So the number 1, supplier is flagged with the subsequent settlement indicator in vendor master purchasing data tab. Number 2, when an invoice is posted, SAP treats it as a provisional or pending settlement. Number 3, during subsequent settlement, the system calculate final amount payable, adjust the vendor account, post the difference to the correct GL accounts. In SAP transactions, F-48 or F-54, down payments and clearing. In MRKO, settlement of GRIR differences, go to vendor master under the purchasing tab, select the subsequent settlement checkbox. So the example scenario, step number 1, vendor A provides 3 months of maintenance services. Number 2, advance payment of 50,000 is made already. Number 3, invoice received for 1,50,000 rupees, partially settled against advance. Number 4, at month end, final settlement is done. Number 5, vendor account is updated, system post difference automatically. So this is example scenario. The important tips: this indicator is usually set for key vendors or contracts involving partial or staged payments. It ensures the SAP automatically handles subsequent adjustment and accounting, reducing manual errors. So the next field is comparison/agreement of business volume necessary. What is this? The term comparison/agreement of business volume necessary is generally used in procurement, sales or contract management. Often in your SAP systems, it indicates whether a formal check or agreement of the expected or actual business volumes between the buyer and the supplier is required. So we can break down a little bit. The number 1 definition, it signals that the company must compare planned, agreed or actual business volumes with the supplier before proceeding with certain actions. Helps ensure that targets, quotas or contract limits adhere to. Number 2 is control spending or procurement volumes against supplier agreements. Ensure contractual commitments are met. Example, minimum purchase quantity or revenue. Avoid over ordering or exceeding agreed limits. Facilitate reporting and auditing of supplier performance. When it is used in framework agreements or long-term supply contracts, before posting orders or invoices, SAP may require confirmation of business volumes. For discount or rebates tied to volume thresholds, example, supplier gives 5% rebate if total order is greater than the 10 lakh rupees. In SAP systems, this can be checked. In SAP systems, This can be a checkbox or indicator in purchase order or contracts. So let's say in the practical example, the supplier A, there are two suppliers, supplier A and supplier B. The contract volume is 50 lakh rupees per year for vendor A. Actual volume 40 lakh. Comparison needed? Yes. Confirmation shortfall or adjust order. The action need to be taken for vendor A. Vendor B, 1000 units per quarter, but actual volume is 1050 units. The confirmation needed? Yes. Approve, excess or renegotiate. So these actions we need to take. And the fifth one is SAP usage. Often linked with purchasing info records or contract management, the system can block further orders until volumes are compared or approved. Helps in automated reporting for rebates, penalties or contract fulfillment. The important tips, this indicator is particularly important for volume-based contracts where exceeding or not meeting agreed business volumes impacts pricing, discounts or penalties. The next field is revolution allowed. The term revolution allowed is commonly used in SAP accounting and inventory management. It indicates whether a material or asset or currency item can be revalued in the system to reflect current values. Let's break it down clearly. So the number one, there are 5 stages. Number one is definition. Revolution allowed, which is nothing but the system permits adjusting the value of an item in the sense it can be a material or asset or account to reflect current market price, exchange rate or valuation changes. Used in inventory management and asset accounting and finance FI. Number 2 purpose, ensure financial records are accurate and reflect the true value or the current value. Maintain compliances with accounting standards like IFRS or GAAP. Adjust for price fluctuations, currency changes or market value changes. So usage in SAP. Number 1, material master under MM. Field indicates whether material valuation can be adjusted. Useful for price fluctuations or periodic inventory revaluation. Number 2, asset accounting under the financial accounting. Field allows revaluation of assets for market value or inflation adjustments. Number 3, currency revaluation under financial accounting FI. Applied for open items or foreign currency at period end. Transactions/configurations. In MR21, price changes for materials. AR01/F.05 asset revaluation. F.05/FEGL _FC_VAL currency revaluations. So these are all the 3 methods. Number 5, key points. Must be carefully controlled. Incorrect revaluation can distort financial statements, often restricted by user authorizations. Only applicable for item flagged as a revaluation allowed in master data. The important tips, always check whether revaluation is allowed before performing inventory price adjustment, asset revaluations or currency adjustments to avoid posting errors. So the next field is supplier RMA number required. The term supplier RMA number required is commonly used in procurement, return managements and ERP system like SAP MM and SD modules. It refers to whether a return merchandise authorizations number from the supplier is mandatory for processing returns. So the definition, RMA, return merchandise authorization number, a unique reference number issued by a supplier to authorize the return of defective, damaged or excess goods. So this is called RMA, return merchandise authorization number. Indicator required means the system or process cannot process the return without this RMA number, which is received from the supplier. Number 2 purpose, ensure returns are authorized and traceable. Helps the supplier track returned items and approve credit or replacement. Prevent unauthorized returns, avoid dispute or losses. Facilitate accurate accounting, credit notes and inventory adjustments. Number 3, how it works in practice. Buyer identify defective or excess goods. The number 1. Step number 2, buyer request RMA from supplier. Number 3, supplier issues RMA number. Number 4, buyer ships goods with RMA number referenced. Number 5, system, which is nothing but SAP MM, validate the RMA number before processing the return or credit memo. So then, SAP usage. In SAP purchase order or return delivery, there is an RMA field. If the supplier RMA number required, indicator is set. Return delivery or credit memo cannot be posted without RMA number. Ensure processes, compliance and traceability. Common in warranty returns, vendor managed inventory and quality returns. So these are all the commonly used cases in our SAP system. The important tips: always obtain and verify the RMA number before shipping returned goods, as this prevents credit delays and stock reconciliation errors. So the next field is indicator relevant to price determinations, vendor hierarchy. Is a field used in SAP material management module and purchasing to control how vendor specific pricing is determined during procurement. So let's break it down detailedly. So there are 5 different stages. Number 1, definition. When this indicator is set in our SAP system, the system considers the vendor hierarchy for automatic price determination in purchase orders. What is vendor hierarchy? A ranking or sequence of vendors that SAP checks when determining the price for a material. Number 2, purpose. Ensures that the correct purchase price is selected based on predefined vendor priorities. Supports multiple vendors for the same material with different pricing conditions. Helps in automating pricing determination and reducing errors in purchase orders. Number 3, how vendor hierarchy works. So the number 1, define vendor hierarchy in SAP, a list of vendors in priority order for a material. Number 2, assign material and purchasing info record to the vendors. Number 3, when creating a purchase order, SAP checks the hierarchy. First, checks the vendor in hierarchy for valid pricing conditions. If not found, move the next vendor. So step number 4, price is determined automatically based on the first matching vendor in the hierarchy. So then stage number 4, example scenario. There are 2 material X and Y. The material X vendor hierarchy is vendor A, vendor B and then vendor C. The relevant to price determination, yes, selected price from vendor A. System will select the price from the vendor A based on the vendor hierarchy. So the material Y, vendor B and vendor C. So the relevant for price determination is no. Price determined by other conditions. Okay, there are 2 scenarios. The usage: field locations, purchasing info record, control data / vendor tab, price determination indicator. Indicator checked, SAP considers vendor hierarchy during PO creation. Supports conditions technique for pricing discounts and surcharges. The important tips: always maintain a clear vendor hierarchy for materials with multiple suppliers to avoid incorrect price selections. This is especially useful for large organizations or centralized purchasing where the multiple vendors supply the same material at different prices. So the next field is indicator index compilation for subsequent settlement active. The indicator is a field in SAP MM and SD module and accounts payable used in the context of subsequent settlement or contract based procurement. So let's break it down clearly. So the first one, definition: when this indicator is active, the system compiles and tracks an index for items or services to be used in subsequent settlement accounting. The index is typically used to calculate price adjustments, escalations, or final settlement for contracts or long-term agreements. In short, the indicator signals that the system should collect and maintain data for later settlement calculations. The stage number 2, purpose: facilitates automatic adjustments in subsequent settlement, useful in contracts where price are linked to indices, benchmarks, or consumption volumes. Payment is made after final verification or settlement. Ensures accuracy and transparency in long-term procurement or service agreements. How it works in our SAP system? The number one, supplier or contract is flagged with the subsequent settlement. Number two, index compilation indicator is set for material or services covered. Number three, during contract execution, SAP collects the relevant consumptions, price or volumes, maintains a running index for settlement calculation. Number four, at settlement time, SAP uses the compiled index to calculate final payable amount, adjust vendor's account accordingly. SAP fields and transactions. And the vendor must go to purchasing data, subsequent settlement. So you can use the T code ME32K or 33K for contracts, MRKO for GRIR clearing. Custom index tables may be used depending on configurations. So the important tips, this indicator is critical for contracts with variable pricing based on indexes. Ensures automated, auditable and accurate settlement, reducing manual calculation and errors. So the next field, indicator document index compilation, active for purchase orders. The indicator document index compilation active for purchase order is used in SAP MM material management and contract management to control how data from purchase order is collected and processed for subsequent analysis or settlement. Let's break it down clearly. The step number one, definition. When this indicator is active, SAP compiles a document index for each purchase order. This index collects key information such as quantities, values and dates which can later be used for subsequent settlement, reporting and auditing, price adjustments or benchmarking. In short, it signals that the system should track and store PO data systematically for later use. Second stage, purpose. Facilitates subsequent settlement accounting for contracts or long-term purchase agreements. Support automatic calculation of adjustments such as price escalations, volume-based rebates, index-linked payments. Improves transparency and traceability of purchase orders. Stage number 3, how it works in SAP. Step number 1, purchase order is created for a material or a service. Step number 2, document index compilation indicator is active. So SAP records the relevant PO data in index tables. Step number 3, during subsequent settlement or reporting, the system reads the compiled index, calculates final settlement or adjustment automatically. Step number 4, reduce manual effort for long-term contract and ensure accurate accounting. And SAP transactions and tables. In ME21N or ME22N, so PO creation or PO change, set the indicator. MRKO, settlement of GRIR or contract based adjustments. Tables may include EKPO, EKBE, custom settlement index tables. The stage number 4, example scenario. Step number 1, long-term supply contract with vendor X. Step number 2, purchase order created over the year. Step number 3, document index compilations active for all POs. Step number 4, SAP collects PO quantities, price, delivery dates. Step number 5, at contract settlement, SAP calculate rebate or adjustment based on compiled data. The important tips, use this indicator for framework agreements or long-term contracts, not for one-time purchases. Ensures system can track cumulative volumes and prices for reporting and settlement purposes. So the next field is automatic evaluated receipt settlement for return items. This is used in SAP MM Material Management and Accounts Payable FI, specifically in the context of returns and vendor invoicing. Let's break it down detailedly. There are different stages. Stage number 1, definition. Evaluated receipt settlement, generally we used to call as ERS in short form. A process in SAP where the system automatically generate an invoice for the supplier based on the goods receipt. without requiring a separate supplier invoice. Okay, so for return items, this extends ERS to returned goods. SAP automatically calculates the credit or debit to the supplier based on the return quantity and price. In short forms, it allows automatic billing or credit posting for returned goods without manual invoice processing. So stage number 2 purpose: reduce manual effort for processing returns, ensures timely and accurate credit posting to the supplier, and maintains consistency between inventory and accounting. Useful in high volume return scenarios, for example, defective products, over deliveries. Stage number 3, how it works in SAP. Step number 1, return delivery is posted in SAP for goods returned to the supplier. Step number 2, if the automatic ERS indicator is active in SAP, reads the purchase order, delivery and pricing data, automatically generates a credit memo or invoice document for the returned items. Step number 3, supplier is credited automatically and accounting is updated. SAP field and configuration. Under the vendor master purchasing data, you can go to ERS indicator active. Purchase order and item data, ERS allowed for returns. Transaction code MRRL, release of GR based invoices. MIRO, MIRO, manual invoice verifications if ERS not used. ERS process eliminates manual MIRO posting. So this is important information. Stage number 4, example scenario. The step number 1, vendor supplies 100 units of material A. Step number 2, 10 defective units are returned. Step number 3, return delivery posted in SAP. Step number 4, automatic ERS generates credit memo for 10 units at purchase price. Step number 5, vendor account is updated automatically, no manual invoice is needed. So this will reduce, obviously, end of the day, manual work. The important tips: ensure price conditions and PO references are correct, as ERS relies on PO and GR data. ERS for return items is usually enabled for high volume or repetitive returns, reducing administrative overhead. Order acknowledgement requirement. The next field is, so the term order acknowledgement requirement is commonly used in sales, procurement and ERP system like SAP, MM and SD modules. It specifies whether the supplier or vendor must formally acknowledge a purchase order before processing it. So we can break down detailedly. The step number 1, definition. Order acknowledgement we used to call as short form OA. A confirmation from the supplier that they have received the purchase order and agree to the terms, quantities and delivery dates. So the requirement indicator signals whether SAP should enforce acknowledgement from the supplier before the order is considered confirmed or processed further. Stage number 2 purpose: ensures supplier commitment to the purchase order, confirms delivery dates, quantities and terms before the execution, prevents misunderstandings, errors or disputes between buyer and supplier, often linked with workflow control in our ERP systems. Stage number 3, how it works in our SAP. Buyer create a purchase order, PO. Step number 2, order acknowledgement required indicator is active. Step number 3, supplier must acknowledge the PO, accept all terms, order is confirmed, rejects or change terms, buyer reviews and approves the adjustments. Step number 4, SAP can block further processing, example goods receipt or invoice verification, until OA is received, which is nothing but order acknowledgement is received. So the SAP field and configurations: go to PO, go to item data, go to delivery and confirmation tab, go to order acknowledgement required. Can be mandatory for certain vendors, certain materials or certain contracts. So the important tips: this is especially important for high value or critical materials or when supplier reliability is a concern. SAP can generate reminder messages if the acknowledgement is not received within a set time frame. So the next field is mode of transport at the border. So we used to call it intrastate. The field mode of transport at the border intrastate is used in SAP and EU trade reporting to capture the means of transport when goods cross the border, specifically for intrastate declarations. Let's break it down clearly. Step number 1, definition. Intrastate, a system used by EU countries, Europe countries, to collect the statistics on the movement of goods between Europe member states. Mode of transport at the border refers to the transport type used to the EU border, example road or train or sea or air, when goods enter or leave the country. This information is mandatory for intrastate reporting, especially for Europe countries. Step number 2, purpose. To comply with EU trade reporting requirements, help statistical authorities track trade flows and logistics patterns, ensure accurate classifications of transport for taxation, trade and compliance reporting. So step number 4, usage in SAP. Field located in delivery document. Field located in delivery document in header shipping tab and intra-state data. Filled during goods issue or cross-border shipment. Automatically used in intra-state reporting, especially EU via SAP reports or equivalent. The important tips: always ensure the correct mode of transport code is selected as it affects intrastate statistics and can trigger audit queries. For combined transport, like example road plus sea, the mode at the EU border must be used. So the next field is purchasing group. Before going to purchasing group, you can see the examples. The common mode of transport, EU intrastate codes. Code 1, mode of transport road. Description, truck, van, lorry. So code 2, rail, train transportation. 3, air freight. 4, sea, shipping by vessels. 5, inland waterway, river or canal transport. 6, post, mail, parcel service. 7, fixed transport installations, pipelines, conveyors, cableways. 8, other, any other method. So these are all the common method of transport for Europe country in intrastate codes. Example scenario: the material electronic components shipped from Germany, shipped to France. Mode of transport at border by road. Intrastate report, goods classified with road transport at EU border. So this is a simple example scenario. So the next field is purchasing group. So the term purchasing group is widely used in SAP material management and procurement to designate a team or individual responsible for purchasing activities. Let's break it down clearly. So step number 1, definition. What is purchasing group? An organizational unit or a person responsible for specific procurement task, such as issuing purchase orders, negotiating with vendors, or monitoring the deliveries. It is linked to materials, purchase orders, and vendors, often represented as a 4-character code in SAP. Stage 2, purpose. Assign responsibility for procurement processes, helps in tracking purchase activities and performance, facilitates reporting by purchasing group, example number of order processed, total purchase value, vendor performance, ensure workflow routing is approval or notifications. Stage number 3, key features can be assigned per material or plant or purchase orders, supports segmentation by commodity or region or supplier type, used in reporting like ME2N, ME2K and vendor evaluations. So stage number 4, SAP usage. So the field or location is purchase order, header, PO header, purchasing group field, identify responsible buyer item, material master, MRP1 tab, standard purchasing group for the material, reporting, purchase order reports and analytic by group, example ME2N, ME2K. Example scenario: so the material laptop plant is Chennai plant, purchasing group 0010, buyer team is IT procurement team. So the material is printer Chennai plant, purchasing group 0020, office supplies team. Chemical product Coimbatore plant, 0030 production material teams. So this is how you need to classify the data. When a PO is created for laptop, SAP automatically assigns purchasing group 0010. This group is responsible for issuing the PO, track delivery and handling vendor communication. The important tips: purchasing group is not equal to purchasing organizations, which means the purchasing organizations defines company level procurement responsibilities, legal and contractual. Purchasing group defines person or team level operation responsibility. Proper maintenance ensures accurate reporting and workflow routing. So this is the difference between purchasing group and purchasing organizations. So the next field is planned delivery time in days. The term planned delivery time in days is commonly used in SAP MM material management and procurement to specify the expected lead time for a supplier to deliver goods or service. So we can go detailed breakdown. Stage number 1, definition. Planned delivery time, PDT, the number of calendar or working days that a supplier requires to deliver a material after receiving a purchase order, used for material planning, scheduling and procurement management. Stage number 2, purpose, helps calculate expected delivery date in purchase orders, supports material requirement planning in determining when to place orders, enables on-time production planning and prevent stockouts, affects suppliers' performance tracking. Stage number 3, how it works. Enter the planned delivery time in the material master under the MRP1 tab or PO item. When the purchase order is created, SAP automatically calculates the delivery date. So delivery date equal to PO date plus planned delivery time. Step number 3, this delivery date is used for goods receipt scheduling, production planning, reporting and supplier performance monitoring. So the stage number 4 example scenario, there are 3 materials. One is laptop, there is vendor A, planned delivery time is 7 days. So the PO date is 20th November 2025, expected delivery date is 27th November 2025. Printer, vendor B, 14 days is the planned delivery time, PO date is 20, expected delivery time is 4th December 2025. Third one is chemical, vendor C, planned delivery time is 21 days, PO date is 20th November, expected delivery date 11th December. So this is how you need to set up the planned delivery time for each and every material. Important tips: ensures delivery time includes supplier processing plus transit time. Can be updated per supplier in the purchasing info record, allowing different suppliers to have different lead time for the same material. So the next field is unit of measure group. The term unit of measure group, UOM group, is used in SAP MM material management and ERP system to define how a material can be measured, converted and processed in different units. Let's break it down clearly. The definition: unit of measure group is a classification in SAP that groups all the unit of measures for a material. It defines conversion rules between units, example from base unit to sales unit to purchase unit to stock unit. Help the system handle multiple units consistently for procurement, inventory and sales. Stage number 2, the purpose. Standardize unit conversions across materials, ensure accurate inventory and accounting, supports procurement, production and sales when different units are used. Purchase unit may differ from storage unit. Sales unit may differ from the base unit. Stage number 3, key features. Base unit of measure, main unit for stock and valuation, example kilogram, liter, pieces. Alternative units, units used for purchasing, sales or production, example boxes or pack or trolley or pallet. The conversion factors define how one unit converts to another, example one box equal to 12 pieces. So the UOM unit of measurement group groups compatible unit together for easy assignment to materials. So stage number 4 example scenario, let's say material pen, the base unit of measure is pieces, purchasing unit of measure is box, BX. Sales unit of measure is PC. Conversion factor 1 box equal to 12 pen. So the unit of measure for group is pence. So the milk base unit of measure is liter. Purchasing unit of measure is bottle. Sales unit of measure is liter. Conversion factor is 1 pet equal to 1 liter. The unit of measurement group is liquid. Third one is sugar. Base unit of measure is kg, kilogram. Purchasing unit of measure is bag. Sales unit of measure always kilogram. 1 bag equal to 50 kg. The conversion factor. The unit of measurement group is sugar. This is how the SAP uses the unit of measurement group to know which units are valid and how to convert between them. The important tips: always assign the correct unit of measure group to a material to avoid inconsistencies in inventory valuation and reporting. For example, if a supplier delivers in boxes but your stock is in pieces, the unit of measurement group ensures SAP converts the quantity correctly. So the next field is rounding profile. The term rounding profile is used in SAP MM and SD and pricing to control how quantities, prices and totals are rounded in purchase orders, sales orders, invoices or billing documents. Let's break it down clearly. The definition: rounding profile specifies rules for rounding values to certain units, decimal places or multiplies, ensures consistency in pricing, quantity and financial postings, helps comply with the legal, accounting or supplier or customer agreements. The stage 2 purpose: avoids discrepancies due to decimal rounding, ensures invoice total match negotiated terms, support unit based rounding, example ordering in multiple of 5 or 10 units, prevents accounting errors during posting of prices or quantities. So here you can see some key features. First one is quantity rounding. The description: round purchase or sales quantity to nearest allowed unit. For example, 1.25 kilogram equal to 1 kilogram or 1.5 kilogram depending on the rule. You can fix the rule. If the value is 1.25, either you can make it as 1 or you can make it to 1.5 automatically. So this is quantity rounding. Then price rounding: round unit prices to nearest cent or specified fraction. Example, 99.995 rupees equal to 100 rupees. You can round up with 100 rupees. And the final one is total rounding. The round invoice total to nearest currency unit. Example, 1234.56 equal to 1235. The final one is rounding factor, defines multiple for rounding, example multiples of 5 units. So these are all the key features in the rounding profile. So the next one is how it works in SAP. Defined in purchasing or sales configuration or material master. When a PO or sales order or invoice is created, step number 1, SAP applies the rounding profile to quantities or prices or totals. Number 2, adjusted values are used for document posting and reporting. In Material Master, go to MRP 1 view, Sales Organization 2 tab. Here you can assign the rounding profile. In Purchase Order, go to Order Item Details and then assign the rounding profile. So the stage number 5, example scenario. The material sugar ordered for 12.3 kilogram. The rounding profile round to 0.5 kilogram, which means the quantity rounded into 12.5 kilogram. Instead of 12.3, it is rounded with 12.5 kilogram. The unit price is 45 rupees 67 paise. So it is rounded with 45.68. So instead of 3 digit, we rounded it to 2 digits. 45.678 to 45.68. The second one is pen, 13 PC rounded to nearest 5 PC, which means the quantity rounded to 15 pieces. For example, if the pen is 11 pieces, then it is nearest one is 10. So it should be rounded to 10 pieces. So 13 is nearest to 15. So it is go to 15. The unit price is 12.345. So it is rounded with the 12.35 rupees. The final one is milk. 7.8 liter is the order quantity, rounded to nearest liter, which is equal to 8 liter. If suppose it is 7.2 liter, it should be rounded quantity should be 7 liter. In the same way, unit price per liter is 38.567. It is rounded with 38.57 rupees. So this is the example, detailed examples, 3 different type of examples. You can understand very well about the rounding profile and the purpose of rounding profile. SAP automatically adjusts quantities and prices based on the rounding profile. The important tips: use rounding profiles to standardize procurement and sales processes, especially when dealing with supplier with fixed packaging units, prices with many decimal places, legal or contractual requirements for rounding. The next field is indicator relevant for settlement management. The indicator relevant for settlement management is used in SAP MM and SD or financial accounting. CA is nothing but contract accounts. So under the FI, contract accounts, to identify whether a transaction or material or contract item is subjected to settlement processing. Let's break it down clearly. Stage number 1, definition. When this indicator is active, SAP treats the item or transaction as relevant for settlement. Settlement management refers to the automatic calculation, posting and clearing of amounts based on agreements, contracts or periodic process. So commonly used in service contracts, long-term supply agreements, leasing or rental agreements. Stage 2, purpose: ensures accurate and automated settlement of charges, rebates or contract values, supports periodic billing or crediting in structured manner, improves auditability and compliance by marking item that must be tracked in settlement. So how it works in SAP? Stage number 3. The transaction or material is flagged as relevant for settlement management. Step number 2, during the settlement run, SAP collects all relevant items, calculates settlement amounts, for example, final payment or rebate or adjustment, post settlement automatically to vendor or customer accounts. Step number 3, reduces manual reconciliation effort and ensures contract compliance. So here the SAP field and transaction, under the material master, go to service items, settlement management checkbox. In contract, go to item or condition level. So settlement transactions, the T code is MRKO for GRIR clearing, FIGL underscore FC underscore VAL or custom settlement program for contract based options. So the example scenario: vendor provide monthly IT support services. The description: each month services delivered or flagged as relevant for settlement. Contract specifies quarterly payment. SAP collects service entries and calculates settlement automatically at quarter end. Settlement run post final payment. Vendor account is updated with accurate amounts. So these are all the example scenario. Then the important tips: always flag on the item or material that require structured settlement to avoid unnecessary postings. Works best for framework contracts, recurring services and long-term agreements where multiple transactions accumulate before final settlement. So the next field is deletion indicator for supplier at purchasing level. The deletion indicator for supplier at purchasing level is a field in SAP MM material management used to mark a supplier or vendor as deleted at the purchasing level without completely removing the vendor from the system. So let's break it down clearly. The stage number 1, definitions. In definitions, when this indicator is set, the vendor is blocked from future further procurement activities at the purchasing level. Existing historical documents remain in the system, but no new purchase orders or contracts can be created for the vendor. This is different from deleting the vendor master data entirely, which is generally restricted for audit and legal reasons. Stage number 2, purpose: prevents accidental or unauthorized purchase orders to inactive or obsolete vendors. maintain historical data for accounting, reporting and audit purposes, helps in vendor lifecycle management, especially when vendor are terminated, replaced or no longer approved. Stage number 3, how it works in SAP. First step, access vendor master purchasing data. Step number 2, set deletion indicator for purchasing in purchasing level. Step number 3, SAP will block new purchase orders, schedule increments and contract for this vendor. Allow access to historical POs, invoices or GR for reporting the audit. Step number 4, indicator can be reactivated if the vendor is reinstated. So SAP field and transaction. Under the transactions /NBP, go to vendor master purchasing data. Here you can set the indicator. So reports like ME2L, ME2N respect deletion indicator and typically exclude vendor marked for deletion. The important tip, always use purchasing level deletion rather than full vendor deletion to maintain audit trail and historical reporting. Consider communication to procurement teams to avoid attempting POs for deleted vendors. So the next field is group for calculation schema supplier. This is a field used in SAP MM and purchasing to define which pricing schema or calculation rules apply when dealing with a particular supplier. Let's break it down clearly. Stage number 1, calculation schema group for supplier. Link a supplier to a specific set of pricing and calculation rules in our SAP system. Controls how purchase prices, discounts, surcharges and taxes are calculated automatically when creating purchase order or invoices. Work together with condition technique in SAP for automatic pricing determination. The stage 2 purpose ensures consistent pricing and calculations for each supplier. Simplifies automation of purchase order pricing. Supports rebates, discounts or special agreements per supplier. Reduces manual effort and errors in pricing. Stage number 3, how it works in SAP. Step number 1, define calculation schema in SAP. Example, base price plus freight plus tax minus discount. So this is how you can set up the calculation schema. Stage number 2, assign calculation schema group to supplier in vendor master purchasing data. Step number 3, when a purchase order is created for that supplier, SAP automatically applies the assigned calculation schema, ensures correct net price, tax and other conditions are applied automatically. So the configuration, go to SPRO, material management, purchasing, conditions, define calculation schema. You can create different type of calculation schema by using this menu path. So the example scenario, there are 3 vendor A, B, C. Vendor A schema group is for A01. So the applied calculation schema, base price plus freight minus 5% discount, effect purchase order price auto calculated. Vendor B, B02, base price plus tax plus surcharge. Net price includes tax and surcharge, the effect. Vendor C, C01, base price only, no discount or surcharges applied. This is the effect. This is how the schema group for supplier is working in our SAP system. The next field is automatic generation of purchase order allowed. This is used in SAP material management and procurement to indicate whether the purchase order can be automatically created by the system rather than manually by a user. So let's break it down clearly. Step number 1, definition. When this indicator is active, SAP allows automatic creation of purchase orders for a material or vendor. Typically used in MRP, material requirement planning or consumption based planning scenarios. Supports efficient procurement automation and reduces manual effort. Especially used for MRP process. So once you run the MRP for any given finished product, system will generate planned order for semi-finished and finished product, and the system will generate purchase requisitions for raw materials. Then this purchase requisitions PR document automatically converted into PO by using this automatic generation of purchase order allowed option. So the stage number 2 purpose automates PO creation based on requirements or planning runs. As I said, ensures timely procurement and prevent stockouts, improve efficiency in high volume or repetitive procurement processes, helps maintain consistent ordering practices for recurring materials. How it works in SAP? The first step, material master or vendor master has the indicator set for automatic PO creation. Step number 2, MRP run in MD01, MD02 or MD04 identifies requirements or shortages. SAP automatically generate purchase requisitions and the purchase orders depending on the configuration. Step number 4, purchase order are either automatically created and released or created for review by the purchasing group before release. So the SAP field and transactions in material master, go to MRP1 tab. So click on automatic PO allowed. In vendor master, under the purchasing data, you can select relevant indicator. So the transaction ME21N or ME59N automatic PO generation from existing purchase requisition document. So example scenario, printer vendor A auto PO is allowed. So MRP run MD01, PO automatically created for required quantity. Second material is laptop vendor B, auto PO is not allowed, no. After completing MRP run MD01, purchase requisitions generated, manual PO is needed. You need to convert from the purchase requisition to purchase order manually for the laptop. Third one is chemicals vendor C, auto PO is allowed. So you can go to MRP run MD02, PO created automatically and sent to the vendor. So this is an example scenario. So based on your requirement, your client requirement, you can set up the configurations. So the important tips: use automatic PO generation for materials with stable demand and reliable vendors. Always review settings for lead times, vendor agreements and approval workflows to avoid unwanted automatic purchase orders. Can be combined with release strategies to ensure control over automatically generated purchase orders. So the next field is price determination, date control. This is a field used in SAP MM and SD to control which data the system uses to determine the pricing conditions for a purchase order or contract or sales order. Let's break down clearly the definition. This field specifies the reference date for condition. Condition is nothing but price in SAP. Pricing in SAP depends on condition records, for example discount, surcharges, taxes. The pricing date decides which condition record is valid at the time of purchase or sales process. The common scenario: PO created today, delivery next month. Which date is price should be applied? Stage number 2 is purpose. Ensures accurate pricing based on agreements or valid conditions. Avoid overcharging or undercharging due to change in price conditions. Support contract compliance and auditing. Important for materials with fluctuating prices like raw materials, commodities or seasonal products. Stage number 3. So how it works in SAP? The price date control, PO date. Description: pricing conditions valid on the date of purchase order creation. So then goods receipt or delivery date, pricing based on expected delivery date. Invoice date, pricing based on the invoice posting date. Custom date, material or vendor validity date, allows flexible determination using custom rules. These are all the 4 methods used to control the price determinations. So the process, the step number 1, PO or sales order is created. Step number 2, SAP checks the pricing date control field. Step number 3, system select appropriate condition records based on the date. Step number 4, net price, discount and taxes are calculated accordingly. So the scenario example, material is steel, PO date is 20th November 2025, delivery date is 5 December 2025. So the price determination date is PO date. So the condition applied, price valid on 20th November 2025. Let's say net price is 50 kg per kg. The other material paper, PO date is 20th November, delivery date also same 5th December, but price determination date is delivery date. So based on the conditions applied, price valid on 5th December 2025, 52 rupees per kilogram. Okay. So based on the price determination date, system will select the condition records. So based on the condition records, price will change. The SAP usage, Material Master MRP 1 tab, under the purchasing tab, price determination date control, you can select the field, or go to purchase order condition tab. System automatically calculates price based on the control. So using an MRP contracts and pricing reports. The important tip, always set the pricing date control according to business practice. PO date for stable prices, delivery date for fluctuating prices, avoids dispute with vendors over pricing differences due to date mismatches. The next field is supplier sort criterion for material. This is the field used in SAP material management and purchasing to determine the order in which vendors are considered for procurement of a material. Let's break it down clearly. The stage number 1, definition. The supplier sort criterion defines a priority or ranking for vendors supplying the particular material. Helps SAP automatically select the preferred vendor when multiple suppliers are available. Works with vendor evaluations, source determinations and pricing procedures. The purpose, ensures efficient procurement by selecting the best vendor first, supports vendor ranking based on price, lead time, delivery, reliability and quantity, facilitates automatic source determination in MRP runs or purchase requisitions processing. How it works in SAP, stage number 3. First step, assign supplier sort criterion to a material vendor combination. Step number 2, during purchase requisitions, conversions or MRP run in SAP, checks all vendors for the material, sorts vendor according to the criterion, example price and reliability, selects the first vendor in the shorted list for automatic PO creation, can be combined with vendor evaluation scores to make procurement decisions more effective. The SAP field and transactions, under the Material Master Purchasing tab, you can apply the sort criterion. In purchasing info record, link vendor to a material. In transaction ME51N, ME21N, PO creation and PR creation, MD04, MD01 for MRP run. So stage number 4, example scenario, A material, laptop. There are 3 different vendor. The first vendor A, sort criterion 1, prepared, lowest price, good quality, good reliability. Laptop vendor B, sort criterion is 2, slightly higher price. Laptop vendor C, sort criterion is 3, backup supplier. In result, automatic PO created for vendor A, selected first. Vendor B and C considered only if a vendor A is unavailable. If A is unavailable, then system go to select vendor B. If B also unavailable, then system go to the last one is, third vendor is C. So this is how system calculate sort criterion for materials. The key points, criterion values can be numeric, so or based on predefined sorting rules. 1 is equal to highest priority, so 2 is the medium priority, 3 is the lowest priority. Like this you can use the values. Supports automatic source determinations, improving procurement efficiently, can be updated periodically based on vendor performance or market conditions. The important tips, use supplier sort criterion along with vendor evaluation scores for optimal procurement decision making, helps reduce procurement cycle time and ensures POs are sent to the most reliable or cost effective vendor first. The next field is centrally imposed purchasing block. This is a field in SAP material management used to prevent procurement of a material across all plants or purchasing organizations for statistic, operational or compliance reasons. Let's break it down clearly. So the stage 1, definitions. A purchasing block is a restriction set in SAP to stop the creation of purchase orders or requisitions for a specific material or specific vendor. Centrally imposed means it applies globally across all plants, purchasing organizations or company codes rather than being limited to a single plant or single PO. The purpose, prevents procurement of restricted, absolute or non-compliant materials, ensures corporate control over purchasing for safety issues, legal compliance, contractual or vendor restrictions, cost control, helps avoid accidental purchases that could lead to operational or financial risk. Stage number 3, how it was work in SAP. For step number 1, central purchasing department sets a centrally imposed block on your material or on your vendor. Step number 2, SAP checks the block indicator during purchase requisition creation, purchase order creation, scheduling agreement release. Step number 3, if a block exists, SAP prevents further procurement transactions for the material or vendor. Users receive a warning or error message depending on configurations. So the SAP field in transactions, go to material master purchasing data. Here you can select centrally imposed purchasing block, or vendor master purchasing data, you can select purchasing block. So the transaction is MM02 or /NBP to set the block. The example scenario, the material chemical centrally imposed cannot create POR or PR in any given plant. Laptop model A, plant specific block, only restrict at plant Chennai, other plants can purchase the laptop model A. Vendor Y, centrally imposed, cannot create any PO with vendor Y globally. These are all the 3 different scenarios. Based on the client requirement, you can choose the scenarios. So the key points, centrally imposed blocks override plant specific blocks, can be temporary or permanent depending on business need. Useful for quantity issues, discounted products or legal restrictions. The important tips, always communicate centrally imposed blocks to all relevant procurement teams to avoid confusion and manual workarounds. SAP allows blocking both material and vendor, offering flexibility in procurement control. So the next field is purchasing block at purchasing organization level. This is a field in SAP MM material management that allows a material or vendor to be blocked for procurement within a specific purchasing organization without affecting other organizations. Let us break down it clearly. The stage 1 definition, a purchasing block restricts procurement of a material or vendor. When applied at the purchasing organization level, the block only affects purchase orders, requisitions or contracts created under that specific purchasing organizations. Other purchasing organizations with a company can still procure the same material or vendor. Stage 2 purpose provides localized control over procurement without disrupting operations in other regions or departments. Useful for scenarios such as quality issues in the one plant or region, vendor specific restrictions for certain organizational units, temporary procurement suspension during audits or negotiations. How it works in SAP. Step number 1, access vendor master or material master in purchasing data tab, purchasing organizations. Step number 2, set purchasing block for the relevant organization. Step number 3, SAP checks the block during purchase requisition creation, purchase order creation, scheduling agreement release. Step number 4, if the block is active, SAP prevents procurement transactions for that organization. Other organizations remain unaffected. The SAP transaction is in MM02 material master, purchasing organization data. In /NBP vendor master, go to purchasing organization data to see the field. The example scenario, laptop model A, purchasing organizations PO01, purchasing block is active, effect PO or PR cannot be created in PO01 organization. Laptop model A for purchasing organization PO02 not active, PO or PR creation allowed in PO02 organization. Vendor Y PO01 active, cannot create POs in PO01 other organizations unaffected. So these are all the 3 different scenarios. This allows targeted restrictions without affecting the global availability of the material or vendor. Stage number 5, key points, plant specific versus organization specific. Plant level blocks restrict only a plant. Purchasing organization level blocks restrict all procurement under the purchasing organization. Central block versus organization level block. Central blocks affect all organizations globally. organization level blocks are more flexible and localized. The important tips: use purchasing organization level blocks for targeted operation control. Example, suspending procurement in a particular region without affecting other regions. Communicate blocks clearly to the procurement team to avoid errors or confusion. The next field is confirmation control key. So this is a critical field in SAP material management and procurement that defines what confirmations a supplier must provide for a purchase order. Let's break it down clearly. The stage 1 definition: the confirmation control key specifies the types of order confirmations that are required from the vendor and how the system should process them. It is assigned at the PO item level and controls order acknowledgement, shipping notifications, goods receipt confirmations. The stage 2 purpose: ensures supplier commitment to the order quantities, delivery dates and terms, improves tracking of procurement executions, supports integration with advanced shipping notifications, ASN and logistics confirmation process, helps in automatic workflow checks for order status and delivery. Stage number 3, how it works in SAP. So step number 1, define confirmation control key. SAP allows multiple keys depending on the type of confirmation required. Each key can control order acknowledgement required, deliveries, schedule line item confirmations, goods receipt confirmations. Step number 2, assign key to PO item or material. During PO creation in ME21N, the key is entered in the PO item confirmation tab. Step number 3, system behavior checks for confirmation from the vendor, can block GR posting or trigger alerts if confirmation are missing. Stage number 4, example scenario for confirmation control key. The confirmation key A, B, C, D. So the first one is A, order acknowledgement required, vendor must acknowledge the receipt of PO. Confirmation key B, delivery schedule line item confirmations, vendor confirms delivery dates and quantities. Confirmation key C, goods receipt confirmation, confirms goods shipped match PO quantity. Confirmation key D, all confirmations optional, no mandatory confirmations. So now the example scenario, step number 5, materialist laptop, PO quantities entered, confirmation key for example A. The vendor action, vendor acknowledges the PO, SAP behavior, GR blocked until acknowledged the PO in vendor side. Second material is printer with quantity of PO 50 number, confirmation key is B. Vendor confirms delivery schedule, GR date monitored, alerts if delayed. Third one is chemicals with PO quantity of 200 number, confirmation key C, optional confirmations. GR can be posted freely without any verifications. So stage number 6, SAP usage. Under the Material Master Purchasing Data, you can use the confirmation key. In Purchase Order Item Confirmation tab, go to Item, Line Item. Under the Line Item Confirmation tab, so you can click on the key assignment. Integration with SAP Logistics and MRP to track delivery commitments. The important tips: always align the confirmation control key with vendor reliability and material criticality. Critical or high values items often require mandatory acknowledgement, while routine items may not. The indicator whether supplier is return suppliers. This field is used in SAP MM and procurement to identify whether a vendor is authorized to handle return goods. Let's break it down clearly. So the first one is definition. Return supplier is a vendor who can receive returned materials for reasons such as defect, excess stock or warranty replacement. This indicator flags the supplier as eligible to process return deliveries and credit memos, helps SAP determine which vendors can be selected for returns processing. Stage number 2 purpose: streamlines return to vendor RTV processes, ensures returns are only sent to authorized vendors, avoiding errors and financial disputes, facilitate automatic posting of credit memos. If integrated with ERS, Here is nothing but evaluated receipt settlement. Supports warranty and quantity management processes. Stage number 3, how it works in SAP. Step number 1, set the return supplier indicator in the vendor master purchasing data tab. Step number 2, during return delivery creation, SAP checks if the supplier is flagged as a return supplier. Only flagged suppliers appears in return vendor selection list. Step number 3, return process flows. Return delivery, so MIGO return delivery, correct memo posting or invoice verifications, updates inventory and vendor account. So the SAP transactions and field. In vendor master /NDP, go to purchasing data tab. Then you can select return supplier checkbox. Used in MIGO, MIRO or RMAS processes. The example scenario, there are 3 different vendor A, B, C. The first vendor A, return supplier is S. Effect is can receive defect goods, correct memo can be posted automatically. Vendor B, the return supplier is no authorized for returns, system prevent return delivery. Vendor C, yes, handles warranty replacement, ERP tracks return processes. If a defective material is identified, SAP only allows return to vendor A or C, not B. The key points: ensures returns compliance with vendor agreements, reduces manual interventions and errors in return processing, often used with quantity management to track defective items. The important tips: always maintain accurate return supplier data to avoid sending goods to wrong vendors. Can be combined with automatic ERS for return items to fully automate return and credit processes. Next field is automatic debit creation on goods issues. This is a field in SAP MM and SD that controls whether the system should automatically create a debit when goods are issued. Let's break it down clearly. The stage number 1 definition: when this indicator is active, SAP automatically posts a debit to the vendor or customer account when a goods issue is recorded. Typically used in consignment, subcontracting or special procurement scenarios where goods issuance triggers a financial liability. Eliminates the need for manual invoice or debit note entry. Stage number 2 purpose: automates financial postings for goods movements, ensures accurate accounting and vendor customer liability tracking, reduces manual work and improves process efficiency. Often used in consignment stock issues. When a material is withdrawn from consignment stock, the vendor is automatically debited. Stage number 3, how it works in SAP. Step number 1, configure the automatic debit indicator in Material Master Accounting and Valuation tab, in Vendor Master Purchasing Data tab if vendor specific. Step number 2, when goods are issued in MIGO, goods issue, SAP creates a debit posting automatically based on the valuation classes and account determination. Step number 3, financial effect: debit vendor or expense account, credit stock or inventory account or consignment stock account. The SAP transaction and fields: in Material Master, under the MRP and accounting, automatic debit indicator. In purchase order /goods issue, go to MIGO, debit generated automatically. FI postings viewable in MB51, MIGO and FB03. The example scenario: the first material steel sheet, stock type consignment, goods issue quantity 100 kg, automatic debit yes. Posting effect: debit vendor accounts 50,000 repeat, credit consignment stock. Second material, printer cartridge, stock type regular, goods issue quantity 50 pieces, automatic debit no automatic debit, manual invoice required. Third one is chemicals, stock type subcontracting, goods issue quantity is 200 liter, automate debit yes. Debits subcontracting vendor, credit stock in production. In the steel sheet example, issuing goods from consignment automatically debits and the vendor account reflecting the payment liability. The key points: stage number 5, must ensure proper account determination is set for automatic postings. Works best for high volume transactions where manual invoice creation is inefficient. Can be combined with automatic ERS or for end-to-end automations. ERS is nothing but evaluated receipt settlement we discussed initially. The important tips: use this for consignment subcontracting or vendor managed inventory scenarios. Verify that FI and MM integration is correctly configured, otherwise postings may fail. So the next field is settlement profile for automatic evaluated receipt settlement. So this is a configuration in SAP MM and FI financial accounting that controls how the automatic payments or postings are generated for goods receipt. Let's break it down clearly. Stage number 1, definition. Automatic ERS is a process where SAP automatically creates an invoice and post payments to the vendor when a goods receipt is recorded. The settlement profile defines rules and behavior for this automatic settlement, which accounts to posted to, which documents types to use, whether the process is automatic or requires approval, eliminates the need for a manual invoice mirror for specific goods or vendors. Stage number 2, purpose: automates invoice creation and vendor payments, reduces manual effort and errors in invoice processing, ensures timely payment to vendors and accurate financial postings, commonly used in consignment stock, subcontracting or high volume goods procurement. Stage number 3, how it works in SAP. Step number 1, settlement profile configurations, defines rules in SPRO, material management and logistics invoice verifications, then evaluated receipt settlement ERS. Settings include document type for ERS invoices, postings to GR, IR or direct expense accounts, tolerance limits for pricing differences. Step number 2, vendor or material master assignment. Assign the settlement profile to the vendor or purchasing info record. Indicates which materials and vendors are eligible for automatic ERS. Step number 3, goods receipt. When GR is posted, SAP checks the settlement profile, automatically generates invoice document, post to vendor account and GR/IR clearing account. SAP transaction and fields. Under the Metal Master MRP purchasing data, you can select ERS settlement profile. In Vendor Master purchasing data, ERS indicator is available. In MIGO goods receipt, triggers automatic invoice posting. Check postings in MB03, FB03, MI or 7. These 3 codes. Example scenario: the first material steel sheets, vendor A, settlement profile is ERS underscore STD, which is nothing but standard. Automatic ERS yes. Effect: goods receipt for 1000 kg, invoice posted automatically, vendor account debited. Second material, printing cartridge, vendor B, settlement profile is none, not available. Automatic ERS also no. Manual invoice mirror required after goods receipt. Third material, chemicals, vendor C, ERS is standard, automatic ERS is yes. GR posted, SAP automatically generates and post the invoice. So stage number 5, key points. Settlement profile ensures consistent automatic ERS behavior across vendors and materials. Supports integration with FI for vendor account postings. Can include tolerances for price or quantity differences to avoid posting errors. The important tips: use ERS for high volume repeatable procurement items. To streamline AP process, accounts payable process. Always test automatic postings in a sandbox to ensure correct account determinations and document types. The next field is absolute handling surcharge. The absolute handling surcharge is a field used in SAP MM and purchasing, logistics, pricing to define a fixed additional charge applied to a material or purchase order. Let's break it down clearly. The stage number 1, definition. An absolute handling surcharge is a fixed monetary amount added to the base price of a material or order, typically used to cover handling, packaging or special service cost. Unlike a percentage based surcharges, It is absolute, meaning it does not vary with order quantity. Stage number 2 purpose ensures accurate costing and pricing for materials or service. Covers fixed costs that are independent of quantity. Example, special packaging, freight handling, loading and unloading charges. Support correct total cost calculation in purchase orders and inventory valuation. Stage number 3, how it works in SAP. Step number 1, condition record, then pricing setup. Define a condition type for the handling surcharges. Set the amount as an absolute value. Example, 500 rupees per PO or per delivery. Stage number 2, assignment. Assigned at the vendor or material level or directly in the PO or contract. During PO creations, SAP adds the surcharge automatically to the total price. Step number 3, accounting posting. Surcharge is posted to a designated expense account integrated with FI to ensure correct valuation of stock or cost of goods. So the SAP transaction fields, purchasing info record, conditions, purchase order, go to condition tab, handling charges, ensure the handling charges, automatic postings visible in ME23N, MB03, FB03. You can use these T codes for automatic postings visible. Stage number 4, example scenario. The same 3 material, steel sheets, printing, cartridge and chemicals. Steel sheet base price is 50,000. Absolute handling charges is 500. Total price is 50,500. Fixed handling cost added. Second material base price is 12,000. Absolute handling surcharge 200 rupees. So total value 12,200 per order surcharge. Third material 75,000. Absolute handling surcharge 0. So total price is 75,000. No surcharge applied. Regardless of the quantity ordered, the absolute handling surcharges remains fixed. The key points: absolute surcharge is a fixed per order or items, does not depend on quantity, helps cover operational handling cost in procurement, can be combined with percentage based surcharges if needed for complex pricing. The important tips: use absolute surcharges for fixed cost services and percentage surcharges for cost that vary with order size. Ensure correct account assignment to avoid posting errors in financial documents. So then the next one is percentage handling surcharge. The percentage handling surcharge is a field used in material management and purchasing logistics pricing to define a variable additional charge based on the value of a material or purchase order. Let's break it down clearly. The stage number 1, definition. A percentage handling surcharge is a surcharge calculated as a percentage of the base price or total order value, typically used to cover handling, logistics or service cost that scale with order value. Unlike absolute surcharge, it varies proportionally with the order value or material price. Stage number 2, purpose. Ensures accurate costing and pricing when handling costs are proportional to order size or value. Covers costs like freight handling as a percentage of material cost, packaging charges based on total order value, service charges tied to the transaction value. Supports correct total cost calculations in purchase orders and inventory valuation. Stage number 3, how it works in SAP. Step number 1, condition record and pricing setup. Define a condition type for the percentage handling surcharge. Set the percentage value, example 2% of base price. Step number 2, assignment. Assigned at the vendor or material level or directly in the PO or contract. During PO creations, SAP calculates the surcharge automatically based on the total base price. Step number 3, accounting posting. Surcharge is posted to a designated expense account integrated with FI to ensure correct valuation of stock or cost of goods. SAP transactions/fields. Purchasing info record, you can see the conditions. In purchase order, go to condition tab and then go to percentage handling surcharges. Accounting posting visible in P code 23N, ME23N, MB03 and FB03. The key points: percentage surcharge is variable depending on the base price. best for cost that scale with material or order value, can be combined with absolute handling charges if both fixed and variable costs are exist. Important tips: use percentage surcharges for value-based operational cost like logistics or special handling. Ensure correct accounting assignment for automatic postings in FI financial accounting. The next one is minimum handling charges. This is a field used in SAP MM and purchasing and logistics pricing to define the minimum amount of handling charges applied to a purchase order or material. Regardless of absolute or percentage based surcharges, let us break down clearly. The definition: the minimum handling charges set a floor value for handling or service charges. Ensures that even if the calculated handling surcharges is low, a minimum charges is applied. Prevent undercharging for handling services in small order or low value materials. The purpose: guarantee minimum cost recovery for handling, packaging or logistics efforts. Ensures financial accuracy and avoids loss on small transactions. Works alongside absolute and percentage handling surcharges to maintain total surcharge compliance. How it works in SAP? Step number 1: surcharge calculations. SAP calculates handling surcharges, absolute surcharge plus percentage surcharge. Step number 2: minimum surcharge check. If the calculated surcharge is greater than the minimum handling surcharge, SAP applies the minimum value instead. Step number 3: accounting posting. Minimum handling surcharge is posted to a designated expense account integrated with financial accounting. The SAP transaction and fields. In purchasing info records, you can see the conditions. In purchase order, go to the condition tab, minimum handling charges. Visible in ME23 and MB03 and FB03 tables. T codes. Example scenario: the same three materials. The first material base price is 10,000 rupees, percentage 2%, calculated surcharge 200 rupees, minimum surcharge 500. So applied surcharge 500, total price is 10,500, which means system will take the minimum surcharge. System won't take calculated surcharge because the calculated surcharge is less than the minimum surcharge. Second material cost is 50,000. The percentage surcharge is 1%. Calculated value is 500, but minimum value is 400. In this term, system will apply the calculated value, the 500 rupees. The total value is 50,500. For third material, the cost is 20,000. Percentage 0.5. The calculated value 100. Minimum value 300. So system will apply minimum value 300. The total value of the price is 20,300. So in this scenario, we can understand either calculated value or minimum value. Which one is higher? System will select the higher value. So the key points: ensures minimum cost recovery for small orders, works in combination with absolute and percentage surcharges, helps maintain consistent financial and procurement control. The important tips: always define minimum handling charges for materials where handling costs are significant, even for low value orders. Review account assignment to ensure the surcharges posted correctly in financial accounting. The next field is maximum handling surcharge. So this is slightly differ from minimum handling surcharge. This is also used in SAP MM purchasing logistics pricing, used to define upper limit or handling or service charges applied to a material or purchase order. Okay, so no need to explain everything. You know very well about surcharge. We discussed detailedly in minimum handling surcharge. In maximum handling surcharge, I am just going to explain the scenario, example scenario. The first material base price value is 5 lakh rupees. The percentage value is 2%, which means calculated value is 10,000. So here maximum value fixed as 8,000. So applied only 8,000, total value is 5,08,000. Second material cost is 50,000, 1%. The calculated value 500, maximum value is 1,000. In this scenario, system will apply only calculated value. System won't select the maximum value. Okay. The third material value is 2 lakh rupees. The percentage is 3%. So calculated value 6,000 rupees. Here maximum value is 7,000. System will apply only calculated value, not maximum value. The total value of the material is 2,06,000 rupees. You can understand about minimum handling surcharge and maximum handling surcharge. In minimum charges, system will select which one is higher, either calculated value or minimum value. System will select higher value always. But in maximum values, system always select the lowest one. Let's say our maximum value is 8,000 but calculated value is 10,000, then system will select 8,000 only. But the maximum value is 1,000 but calculated value is 500, then system will select only the lower value. Anyway, in any combination, system will always select the lower value. Okay. So either it is a calculator or maximum limit. System will select always the lower value. Okay. In previous topics, either calculated or minimum, system will always select the highest value. Just opposite. I think you understand the minimum and maximum handling surcharges well. So the next one is evaluated receipt settlement. We used to call as ERS. We discussed already the ERS detailedly. So no need to go for once again. Let's go to next one. Planning calendar. The planning calendar specifies which days are working days and which are non-working days, like a holidays, weekends, for a plant or production resources. Used in MRP, material requirement planning, production scheduling and delivery planning, ensures SAP correctly calculated planned order dates, purchase requisition dates and delivery schedules. The purpose: provide realistic scheduling for procurement and production, ensures material availability when required, avoid planning errors caused by weekends, holidays or plant specific off days, supports lead time calculations for production and procurement. Stage number 3, how it works in SAP. Step number 1, define planning calendar. Specify work days, non-working days and special holiday expense can be assigned to plant, storage location or specific resources. Step number 2, integration in MRP and scheduling. SAP use this calendar to calculate planned order dates and delivery dates. For example, if a material has a lead time of 5 days but includes a weekend, SAP adjusts the schedule based on the planning calendar. Stage number 3, impact. Accurate MRP runs in MD01, MD02. Correct planning delivery dates in PO or production orders. Proper capacity planning in production. So the SAP transaction and field, go to SPRO, logistics, then material management / production planning, then go to define factory calendar, then go to planning calendar. Here you can set up the planning calendar. So then after creating the planning calendar, you assign in material master MRP 1 and 2 tab planning calendar assignment. In production resource under the work center, you can assign the calendar. The example scenarios, the same material we can discuss. The first material lead time is 5 days. So calendar is Monday to Friday working. If ordered on Friday, delivery on the next Friday. So because the weekend, Saturday and Sunday skipped. So the notes calendar ensures weekends are excluded. Second material lead time is 3 days, Monday to Saturday working. If the order on Friday, delivery on Monday. Saturday counted as working day. So third material 7 days lead time, Monday to Friday plus public holidays. Calendar adjust delivery dates, skips holidays, correctly accounts for holiday in planning. So these are all the 3 different methods. The calendar ensures the realistic and achievable delivery schedules. The key points: planning calendar affects MRP scheduling, production orders and purchase order delivery dates. Can be plant specific or shared across multiple plants. Avoid planning errors due to non-working days, holidays or shifts. Important tip is always assign to correct planning calendar to material, plant and production resources. Update calendars regularly to account for new public holidays or special off days. The next field is planning cycle. So what is meant by planning cycle? The planning cycle in SAP is a concept used in material requirement planning MRP to define the frequency and timing of planning runs for a material. It determines how often SAP checks material requirements and generates procurement proposals like a purchase requisitions, planned orders and production orders. So the definition: A planning cycle specifies the interval at which MRP runs for a material, helps in periodic planning, especially for materials that are ordered or produced on a schedule, typically defined in days, weeks, or months depending on business requirements. The purpose: automatic material planning for repetitive or periodic requirements, reduces manual intervention in procurement and production planning, ensures timely creation of planned orders or purchase requisitions, optimizes inventory levels by scheduling procurement at regular intervals. Stage number 3, how it works in SAP. Assign planning cycle to material. Step number 1, in Metal Master, go to MRP1 and MRP2 tab. Planning cycle field is there. Can be specific to MRP type, PD or VB, etc. Step number 2, define planning cycle in customizing. Go to SPRO Metal Management under the MRP, define planning cycle. So define planning cycle name, period, days, weeks, months and time points based on your client requirement. Step number 3, MRP run. SAP checks the material on assigned dates, generates procurement proposals based on the stock levels, safety stock, forecasted or actual demand. So here the transaction and field, SAP transaction and field, MD01, MD02, MD03 for MRP run. Metal Master planning cycle assignment. Example scenario, the same 3 material. The first material planning cycle is weekly. Interval is every Monday. MRP run action, generate purchase requisitions for projected demand. Note, ensures stock replenishment weekly. Second material daily. Interval is every day. MRP checks stock and generates PRs if below safety stock, suitable for fast moving items. Third one is monthly. First day of the month, planned orders for next month, suitable for slow moving materials. Planning cycles automate when MRP evaluates the material, avoiding manual checks. The key points: helps schedule periodic planning efficiency, works together with planning calendar to respect non-working days, can be material specific or group specific, reduces stockouts or excess inventory by maintaining timely replenishment. The important tips: use shorter cycles for high volume, fast moving items. Use longer cycles for slow moving or expensive items to reduce planning effort. Ensure planning cycles align with the lead time and delivery schedules. So the next field is restriction profile for PO based load building. So this is in SAP is a field used in SAP logistics executions and transportation management to define constraints and rules for grouping purchase orders into transport loads. It ensures efficient and compliant shipment planning. So the definition: restriction profile determines how POs can be combined into a single transport load. Control restrictions such as weight, volume, route or delivery dates. Used in PO based load building in SAP MM transport management and LE logistics executions. So stage number 2, purpose: optimize transport planning and load consolidation, prevents overloading or inefficient shipment combinations, ensures compliance with the delivery windows, routes and material handling requirements. This supports automatic or manual load printing in SAP transport management. How it works in SAP? Stage number 3. Step number 1, assign restriction profile in Metal Master under the shipping and transportation tab. In Vendor Master under the purchase order transport requirements. During load building, SAP checks all assigned POs for maximum weight, volume, route restrictions, delivery date constraints, material specific handling requirements. Only compatible POs are grouped into a single transport load. The result is SAP generate transport proposals or shipments based on restrictions compliance, prevents manual errors and overloads. So the SAP transaction and field: VL10, VL10B, VL10C, purchase order selection for delivery, Metal Master shipping data restriction profile, so transportation cockpit or transportation management for advanced load building. The example business scenario. The first PO 1001, material steel sheets, weight 500 kilogram, volume is 2 meter cube, delivery date 22 November, restriction profile RP1, load assignment is 1. Second PO, the same material 600 kg, delivery date is 22, the same restriction profile, load is 1. Third PO, second material, printer cartridge 200 kg, the same date 22 November, this restriction profile is RP2, then it is coming under load 2. Fourth PO, chemicals 1000 kilogram, 23rd number, delivery date, restriction profile is RP1, it is coming under load 3. POs with RP1 are grouped together only if they comply with the profiles restrictions. POs with incompatible restrictions RP2 are assigned to a separate load. Okay. So key points: restriction profiles define rules for load consolidations, ensures safe, efficient and compliant transportations. Can include constraints like maximum weight or maximum volume, route compatibility, delivery date windows, material specific handling rules. Supports both manual and automatic load building in SAP. The important tips: assign restriction profile very carefully to avoid shipment delays or overloading. Review profiles when new materials, routes or delivery requirements are introduced. So the next field is custom office. Office of Exit and Entry for Foreign Trade. In SAP is a field used in ST module and MM module and Logistics Execution module to define the official customs office through which goods enter or leave a country for foreign trade purpose. So the definition: a custom office represents the government authorized point of entry or exit for goods in international trade, required for export and import processes including customs declarations, export and import licenses, shipment documentation. Stage 2 purpose: ensures compliance with customs regulations, helps generate accurate export or import documentations like shipping bills, invoices and export declarations. Facilitates integration with SAP Global Trade Service (GTS) for customs processing. Required for intra-state reporting in EU countries. EU is nothing but Euro countries, and foreign trade reporting elsewhere. How it works in SAP? Stage number 3. Step number 1: assign custom office. In the sales order or delivery document, specify the office of exit or office of entry, office of exit for export, office of entry for imports. Can also be defaulted in customer master or vendor master or plant or shipping point. Stage number 2: document generations. SAP uses the customs office information to populate export declarations, intra-state reports, export invoices, shipment documents. Stage number 3: integration with SAP GTS for automated custom filing with LE logistics executions, TRA for shipment tracking and compliance. So these are the 2 integrations. Then SAP transaction and field. Under the customer master, sales area data, shipping data, go to select custom office. In delivery document header, go to shipping foreign trade tab. In vendor master, under the purchasing data, go to import custom office. So the example scenario: shipment type export, plant Chennai, custom office Chennai, seaport, purpose goods leaving India for export. Shipment type is import, plant Mumbai, custom office Mumbai airport, goods entering India from foreign supplier. Third one is export, plant Kolkata, custom office Kolkata ICD, land export to neighboring country. The custom office ensures proper legal clearance at the point of exit or entry. So the key points: required for foreign trade compliance can be assigned at plant, shipping point, customer or vendor level, enables secured custom and statistical reporting, supports integration with automated custom systems like SAP GTS. The important tips: always verify the correct customs office is assigned to avoid shipment delays, penalties or compliance issues. Maintain a master list of valid customs office in SAP for consistency. The next field, old entry by supplier. The old entry by supplier is SAP refers to a process or indicator in SAP material management and SD sales and distribution that defines whether a supplier is allowed to responsible for entering purchase orders or order confirmations directly into the system. So the definition: this field or indicator specifies if the supplier can create or maintain orders in SAP, typically used in scenarios like vendor managed inventory, consignment stock, electronic data interchange or supplier portal. Stage number 2, purpose: enables supplier driven order management, reduces manual entry by the purchasing organization, helps maintain real time inventory levels in vendor managed inventory scenarios, support integration with SAP supplier network, EDI or Ariba for automated order processing. Stage number 3, how it works in SAP. Step number 1, indicator assignment. Under the vendor master purchasing data, order entry by supplier flag may also be configured in purchaser info record or supplier portal settings. Step number 2, supplier access or order entry. Supplier can submit purchase order, PO creation in certain cases, order confirmations, delivery schedules. Step number 3, system behavior. If enabled, SAP allows PO or order updates from supplier. SAP can automatically update inventory, delivery schedules and GRIR postings. If not enabled, orders must be entered manually by the purchasing organizations. So the SAP transaction and the field in vendor master /NBP, go to purchasing data, order entry by supplier. In purchasing info record, supplier specific settings, and supplier portal or EDI, direct order submissions. So here the example scenario, there are 3 vendor ABC. The first vendor VMI, vendor managed inventory, is S. Order entry by supplier is active. Action: supplier can create orders based on stock levels in SAP. Vendor B, VMI is no. Order entry by supplier is inactive. Purchasing team create orders manually. Vendor C, VMI is yes. Order entry by supplier is active. Supplier update delivery schedules automatically via EDI, electronic data interchange. In the VMI scenario, the supplier monitors inventory and creates orders in SAP, eliminating manual purchase orders entry. The key points: reduce manual workload for purchasing teams, enables supplier driven supply chain process, require proper authorizations and system access for the supplier, works best with VMI, EDI or supplier portal setups. The important tips: ensure supplier training and system access are in place before enabling this feature. Use audit logs to track supplier entered orders for compliance and reporting. So the next field is price marking supplier. The price marking supplier in SAP refers to an indicator used in materials management and purchasing that signals whether a supplier applies a price mark or label on goods for identification, regulatory or internal purposes. So the definition: price marking is a note or instruction related to the price labeling of materials supplied by the vendor. It indicates whether the supplier is responsible for printing, labeling or marking the price on goods before delivery. Relevant for materials sold in retail, regulated industries or where price transparency is required. Number 2, purpose: ensure compliance with the pricing regulations or customer requirements. Helps streamline receiving and sales process when price are pre-marked. Reduces manual labeling effort at receiving or sales points. Supports audit and traceability requirements for pricing. Stage number 3, how it works in SAP. Step number 1, indicator assignment. Under the vendor master purchasing data, price marking indicator you have to set can also be maintained in purchase info record or PO purchase order conditions. System behavior. When creating a PO, SAP can flag the item for price marking. Supplier is expected to apply price labels accordingly. Receiving team can verify price marking compliance upon goods receipt. Stage number 3, integrations, often combined with goods receipt inspection, can trigger quality notifications if price marking is missing or incorrect. So, example scenario, there are 3 material packaged snacks. Vendor A, price marking is S. Supplier labels items with retail price before delivery. Office paper, vendor B, price marking no. Receiving team handle pricing internally. Bottled water, vendor C, price marking yes. Labels printed with the supplier specific price and batch informations. So the key points. In the packaged snacks example, supplier applied labels help retail ready distribution. The key points. Indicator ensures supplier responsibility for price labeling, supports retail regulatory or internal pricing processes, can reduce manual processing and errors at goods receipt, often verify during inspection or GR posting. The important tips used for retail or consumer ready goods to ensure pricing compliance, combined with supplier notes or PO instructions to ensure clarity. So the next one is rack jobbing supplier. Jobbing supplier in SAP refers to a process in material management and retail logistics where a supplier is responsible for managing inventory and replenishment directly on the retail shelves or racks. So the definition, rack jobbing is a retail practice where the supplier stocks, maintains and manages product on retail shelves. In SAP, the rack jobbing indicator for a supplier identifies vendor who are responsible for this activity. Common in fast-moving consumer products, FMCG, convenience stores or supermarkets. Stage number 2, purpose, ensures self-availability without the retailer manually handling inventory, reduces stockouts and overstock situations, assigns supplier responsibility for inventory management, pricing and display, supports retail agreements and vendor managed inventory setups. Stage number 3, how it works in SAP. Step number 1, indicator assignment. Under the vendor master purchasing data, you can assign the indicator. Can also be configured in material master and purchasing info record. Stage 2, step number 2, supplier responsibilities. Replenish shelves based on agreed planograms. Maintain product quality, expiration checks and pricing, report inventory and sales data back to the retailer. Step number 3, system behavior. SAP may track inventory at the rack level. PO or delivery planning may be automated for rack jobbing suppliers, integrated with VMI or consignment stock processes. Example scenario, there are 3 vendor ABC. The vendor A, packaged snacks, rack jobbing yes. Supplier stocks and manages the self inventory directly. Vendor B, office suppliers no. Retailer manages inventory manually. Vendor C, bottled water, rack jobbing is yes. Supplier monitors sales, replenishment stock and maintains display. For vendor A, the supplier handle stock replenishment and pricing, reducing retailer workload. Stage number 5, key points. Rack jobbing suppliers are responsible for self-level inventory, often linked with vendor managed inventory or consignment stock, helps improve product availability and reduce out of stock situations, requires clear agreements on responsibility, replenishment, frequency and reporting. The important tips: use rack jobbing indicator for high turnover or retail specific products. Combine with the planning calendars and PO based scheduling for timely replenishment. So the final topic under the purchasing data, supplier service level. So what is supplier service level in SAP? Supplier service level is a performance score that indicates how consistently a supplier meets purchase order requirements. It answers Did the supplier deliver on the promised delivery date? Did they deliver the correct quantity? Did the goods pass quality checks? The score is usually expressed as a percentage. The typical formula: supplier service level is percentage equal to number of POs delivered on time and in full divided by total POs multiply with 100. So for example, if 95 out of 100 orders were delivered on time, the SSL is 95%. Supplier service level is 95%. So where it is used in SAP? Step number 1, vendor evaluation, main use case. Supplier service level is a part of ME61, maintain vendor evaluation, ME6A, ME6B, vendor evaluation reports. Sub-criteria can include one-time delivery, delivery reliability, delivery quantity accuracy, lead time adherence. SAP automatically scores suppliers based on PO and GR and delivery date history. Stage number 3, influence in MRP planning. High service level, low safety stock, preferential sourcing, reduced supply chain risk, low service level, extra safety stock, increase procurement lead time, consider alternate supplier. SAP calculate it. SAP checks PO delivery date, goods receipt date, quantity delivered, quantity inspection result if applicable. So based on this, the system automatically generates a score between 0 to 100. So example in SAP context, there are 3 vendor ABC. The first vendor total delivery is 120, delivery on time is 118. The SSL score is 98%, excellent. Vendor B, total delivery 90, delivered on time 75, the SSL is 83%, good. Vendor C, total delivery 85, delivery on time 55, the SSL score is 65, it is poor. So like this you can categorize why supplier service level matters. Helps procurement identify reliability with risky vendors, make sourcing decisions, improve contract compliance, reduce inventory carrying out, improve customer service level. So the SAP transaction related to supplier level. The purpose: maintain vendor evaluations under the T code ME61, vendor evaluation listing ME6A, ME6B and ME6C, purchase order performance reports ME2N, ME80FN, vendor master display. So in ECC XK03, MK03, in S4 HANA system it is only one T code /NBP. Okay, so under the purchasing data tab, the first topic, purchasing data, is successfully completed. Thank you. Under the vendor master purchasing data, topic number 2, partner functions. Partner functions in SAP refers to the role played by a business partner in a business transactions like a purchase order, sales order or contract. The definition: partner function identifies what roles a business partner fulfills in a document. Example: who placed the order, who receives the goods, who gets the invoices, who is responsible for payment. In SAP, a single business partner can perform multiple roles in the same transactions. Common partner functions under the purchasing SAP MM. Partner function VN, which is nothing but vendor, supplier providing the goods or services, PI invoice party, the one who sent the invoice, QA ordering address, address from which the vendor accept orders, GS goods supplier or goods vendor, physical location from where goods are delivered, GP goods recipient, who receives the goods internally. And common partner functions in sales side, SAP SD, sales and distribution module. SP sold to party, customer placing the order, ship to party, customer location receiving the goods, bill to party who receive the invoice, payer who makes the payment. So where partner functions are used: vendor master, customer master, purchase orders, sales orders, contract, delivery documents, invoices. The purpose: defines responsibilities in a transaction, ensures documents flow correctly, automatically determines shipping address, billing address, payment responsibility, ordering responsibility. So the next field is partner functions. Partner number for vendors. Partner number for vendors in SAP is the unique vendor account number assignment to a business partner who performs a partner function in purchasing documents. The meaning, when a vendor performs a role like a vendor or invoicing party or goods supplier, etc., SAP needs to know which vendor master record represents that role. The partner function is the vendor master number, example 100015, where it is used. So you assign under the partner function VN ordering vendor 100015 partner number, invoicing party is 100022 the other vendor, ordering address the same, ordering vendor and ordering address are same, goods supplier is the another partner number 100030. Each partner number is a vendor account already exists in the SAP system. Example, a company buys material from vendor KG suppliers 100015 is the KG supplier. Goods are shipped from their warehouse which is called vendor 100030. Invoices come from a different office vendor 10022. This is a simple example. We are buying a material from one supplier. So goods are shipped from different locations. Generally we used to call as warehouses. Invoices come from different office. It may be the parent company. Then the purpose helps SAP know which vendor handles each process step, who sends goods, who sends invoices, who receives purchase orders, ensure correct communication, posting and document flow used in vendor master, purchase orders, contracts, invoicing, GR and IR postings. The next field is business partner number. A business partner number is a system generated or manually assigned unique ID used to identify vendor, customer, employee, bank, contact persons, any external business entity. Example for the business partner number 100451 10023 PP2025. Where it is used, business partner number appears in purchase orders, sales orders, goods receipt and invoices, vendor and customer master records, financial postings, credit management, supplier evaluation. The key purpose provides one single master record for financial and logistics roles, avoids duplications, makes data maintenance easier, supports integration across MM, procurement, SD, sales, FI, finance, PP for planning. So it integrates all the four modules MM, PP, SD and FI. So the business partner roles, common business partner roles include FLV N00, supplier, vendor role for procurement, FLV N01, vendor for accounting, FLC U00, customer for sales role, FLC U01, customer for accounting role. These are all the common BP roles which we used in our SAP standard system. By copying this common PP role, you can create different business partner role based on your real-time project requirement. So the next one is default partner. Default partner in SAP, simple explanation. In SAP, especially in vendor master or business partner setup and purchasing, a default partner is a partner that the system automatically proposes when you create documents. So it can be a person or it can be a vendor or it can be a customer or contract, etc. Where it is used, the default partner is commonly set in business partner master data, vendor master under the purchasing, customer master under the sales, purchase orders and sales orders. Example in procurement, when creating a purchase order, SAP needs partner roles like ordering address, invoice recipient, goods supplier, payment recipient. If a vendor has one specific partner that is always the same for a role, SAP can mark it as a default so. It automatically appears in new purchase orders. User does not need to enter it manually. Document creation becomes faster and error-free. How SAP decides? SAP decides default partner based on the step number 1, vendor or business partner master data setup. Step number 2, partner determination procedure. Step number 3, partner role assignment. Why default partner is useful? Faster data entry, avoid mistakes, ensures consistency, automatic purchasing and sales document. This is the purpose of default partner in our vendor master partner functions data. So now we discussed detailedly about the partner function field, each and every field in very detailly. So see the example, the quick example. Vendor BP 1000 has two invoice recipients. The business partner BP 2000 invoicing party default S. BP 300 invoicing party no. When create a PO, SAP automatically proposes PP 2000 as a default invoice partner. So this is simple example for your understanding. The partner function field is completed. We can move for the third topic. Thank you. In vendor master data under the purchasing, third one, vendor subranges. In the first field under the vendor subrange, supplier subrange and descriptions. In SAP Material Management MM module, a supplier subrange is used when a single vendor supplies different product lines or services and each needs to be treated separately for purchasing, pricing and evaluation. What is supplier subrange? A supplier subrange represents a specific segment of products or services delivered by a vendor. It allows you to maintain different purchasing data, pricing conditions, delivery schedules, lead times, performance evaluations for different product groups within the same vendor where it is used. Supplier subranges are commonly applied when a vendor supplies multiple categories, example electronics, hardware, office supplies. Each category has different buyer responsibilities. Different plants purchase different product ranges from the same vendor. Different lead time or price applies for different product lines. Where to maintain in SAP? Under the vendor master purchasing data, go to vendor subranges. Here you can maintain the details. You can assign purchasing organization, plant specific purchasing data and subrange usage. Example, vendor ABC supplies product A office furnitures, product B workstation electronics. So instead of creating two vendor, you define ABC subrange FURN, which is nothing but furniture, and the same vendor ABC subrange ELEC electronics. So now SAP can store different prices, delivery schedules, terms and conditions, vendor evaluations for each subrange. Benefits: more accurate pricing, better performance tracking, reduces need to create multiple vendor accounts, helps handling complex vendor relationships. So the next field is plant and description. In SAP, a plant is an organizational unit used in MM, SD, PP and other modules. It represents a physical or logical location where materials are stored, goods are received or issued, production is carried out, services are delivered. Each plant has a description, which is the readable name displayed in SAP system, where is plant and a description is maintained. You define the maintain plants in SPRO, enterprise structure, definition, logistics general, define, copy, delete, check plant. Or you can use the transaction code OX10 to create a new plant. Example, the plant code is 1000, the description is Chennai plant. How used in SAP? Plant is used in purchase orders, material master, vendor master, purchasing data, MRP, production, stock management, sales order as a delivering plant. So let's say the example, plant 1100 Bangalore production plant, plant 1200 Chennai finished goods warehouse, plant 1300 Kolkata sales department. So you can create your plant as a manufacturing unit, or it is a warehouse, or it is a sales point. So the next field is purchasing data. In SAP, especially in vendor master and material master, purchasing data refers to all information required for procurement transactions. It helps system determine how to buy, from whom, at what conditions and under which control settings. So the purchasing data in vendor master, under the transaction code /NBP, go to purchasing data. So here you can update the purchasing data informations under the vendor subranges. So vendor specific purchasing informations, order currency, terms of payment, Incoterms, purchasing group, purchasing organizations, order acknowledgement requirement, GRIR settings, automatic ERS, evaluated receipt settlement, and the controls, purchasing block, partner roles like ordering address, invoicing party, etc., automatic PO allowed, and taxes and conditions, GST or VAT indicators, schema group, pricing data control. So step number 2, purchasing data in material master. Under MM02 or MM01, when you are creating the material master, under the purchasing view, you can update the informations like purchasing group 001, electronics buyer, the plant, 1000 Chennai plant, ordering unit, EA or kg, kilogram, standard price 250 INR, minimum order quantity 10 units, planned delivery time 7 days, goods receipt processing time 1 or 2 days. So these are all the common field which is used under material master. Third one is importance of purchasing data. Purchasing data helps SAP determine which vendor to buy from, calculate purchase order conditions, apply pricing, tax, freight and discount rules, control delivery schedules and logistics, trigger MRP procurement proposals. So these are all the importance of purchasing data. Fourth one is where used. Purchasing data is used in contracts, purchase orders, source list, info records, MRP calculations, GRIR posting, pricing and settlement. So the next field is partner functions. We discussed already about this partner functions. Anyway, give you a short note. In SAP, partner functions define the different role that a business partner plays in a purchasing or sales process. A vendor or customer can have multiple partner roles depending on how the business operates. Why partner functions are needed? They help SAP understand who receives the goods, who sends the invoice, who is the ordering party, who is the payment recipient. In some companies, these may be the same party, but in other they are different. So the common partner functions in MM, purchasing under vendor master. VN, vendor, the meaning is main supplier for purchasing, example ABC supplier. Second partner function is PA, invoicing party, who sends the invoice. So the example finance headquarters. QA, ordering address where orders should be sent. So the example procurement contact office. GS, good supplier, location that physically ship goods, warehouse in Tamil Nadu. AG, agent, commission and representative agent, logistics broker, example. So these are all the common partner functions which is used under material management in vendor master purchasing. So this is about vendor subranges. Under the vendor master purchasing, fourth one is interchangeability. What is interchangeability? So under the interchangeability, the first field is pricing on sub-items, MPN and SUS. So pricing on sub-items, MPN, SUS in SAP, simple explanations. In SAP MM purchasing, sub-items are used when the main items has additional breakdown lines such as MPN, manufacturer part number procurement, SUS, supplier self-service. So these sub-items may have separate price conditions, different vendors or different delivery details even though they belong to the same main PO items. So the step number 1, why pricing is needed on sub-items. Pricing is used on sub-items to handle cases like different manufacturers supplying the same material, split deliveries with the different prices, supplier providing item plus service together, multiple change components needed separate values. Example, main item is a printer, sub-item 1 printer goods 10,000, sub-item 2 installation service 1,000. Both need separate pricing. Step number 2, how SAP handles pricing for sub-items. Sub-item has their own condition type and values. Same pricing schema applies. Condition records can be created at info record level, contract level, PO level. Sub-items get their own net price shown in the PO item detail. So settings required for pricing to work on sub-items. So item category must allow sub-items. Example, the item category MPN, SUS and L. Condition schema must support multiple items. No special schema is needed, but conditions must be item relevant. So the next one is quantity and pricing must be entered separately. Each sub-item line must have quantity, price and pricing conditions. So document flow, purchasing order creation, main items and then sub-items, price calculated individually. So then goods receipt or service entry, received based on sub-item quantities. Then invoice verification, each sub-item matched separately. Then finally accounting, separate FI posting if needed. Step number 5, common real-time scenarios. Scenario 1, manufacturer part with supplier. Main item standard material, sub-item MPN sourced from special manufacturer. Different pricing applies. Scenario 2, material plus service. Main item is hardware device, sub-item installation and service charge, each price independently. Scenario 3, price split. Main item is material, sub-item is container return charges, separate valuation required. These are all the 3 different business scenario. The next field is description of supplier sub-range. So in SAP MM Vendor Master, a supplier sub-range is used when a single vendor supplies different types of materials. Each type has different conditions such as pricing, delivery time, minimum quantities, supply locations and terms and conditions. So the descriptions of supply sub-range is simply the name or label given to identify that sub-range. So the vendor APC supplies, supplier sub-range, electronic materials ELEC, mechanical spares MECH, packaging items PACK. So by using this sub-range you can create different sub-ranges by using this sub-range code. This helps SAP store different purchasing data for different material categories under the same vendor. So where it appears under the vendor master purchasing and info records and purchase orders. So why it is used? To differentiate price, delivery lead time, taxes, discount, contact persons, logistics, locations per material category for the same vendor. So the next field is supplier sub-range. So this one we discussed already, and plant also we discussed already before topic. So no need to go and discuss once again. So the next topic under the vendor master purchasing, vendor text. So we already discussed about the text more than 2 times under the vendor general data, under the vendor company code data. So no need to go again discuss the same thing. So the field language, proposed language, you can select the language based on your client requirement, and text ID, short text and long text, more text exist. All the field which we discussed in the previous videos, you can go through that. The topic number 6, supplier region. So under the supply region, the first field is country/region key. The country/region key in SAP is a code used to uniquely identify a country. So and sometimes it is a region or state. It is a master data field used in many areas of SAP: vendor master, customer master, material master. So for logistics data, company code, plant, tax setup, interstate, foreign trade. So what it represents? The country/region key usually stores the country code. For example, IN, which is nothing but India; for America, US; so for Germany, DE; for Japan, JP. So these are all the country code. So you can write the country code with the country name like India, USA, Germany, Japan. Each country code have 2-digit ID, legal and tax formats, currency defaults, address formatting rules. So the example values, as I discussed, India, IN, US, United States; DE, Germany; SG, Singapore. So in SAP, these are stored in table T005. So where you see it? Under the vendor master address, you can see the country used to determine tax procedures, address format on purchase orders, intrastate or foreign trade declarations. So under the customer master, used for terms of trade, pricing and tax determinations. So under the financials, used to define withholding tax, legal reporting rules, fiscal year variance in some countries. Then the configuration locations. Under the SPRO menu path, go to SAP NetViewer, general settings, set countries. Here the consultant defines country code, currency, time zone, and tax formatting rules. So the next field is supplier region and description. So in SAP MM vendor master purchasing data, supplier region is used to specify from which region the vendor supplies goods. This is especially useful when the vendor has multiple factories or dispatch locations, delivery conditions, taxes, logistics, or freight differ by region. The same vendor supplies different plants from different locations. The step number 1, what is supply region? It is a predefined key that defines the physical area from which materials are supplied. For example, supply region code is TN, meaning is Tamil Nadu, KA Karnataka, MH Maharashtra, GJ Gujarat, KL Kerala. So these are all some examples of supply region code. So then what is description? The description is the full name of the supply chain. For example, code is TN, description is Tamil Nadu. This makes the region readable in reports and purchase documents. Where it is used? Under the supply region is used in vendor master, info records, source list, purchase orders, MRP and source determinations, and delivery and freight calculations. Why it is important? It helps SAP determine taxes, for example, IGST, CGST, SGST in India, expected lead times, freight charges, region logistic rules, material planning per supplier zone. Step number 5, configurations under the SPRO path, material management, purchasing, vendor master data, define supply regions. So you define the code, for example TN, and description is the Tamil Nadu. Real-time examples, the supply plant, Chennai plant, supplied from TN, Tamil Nadu. Second one is Bangalore plant, KA, Karnataka, supplied from. This helps procurement and MRP apply correct delivery timelines and tax based on the specific region. So the next topic is under the vendor master, relationships. What is mean by relationships? Under the relationships, the first field is business partner relationship category. In SAP, especially in S4 HANA and MDG, a business partner relationship category defines the type of relationship between two business partners. It explains how one BP is connected to another, such as a parent company and its subsidiary, a manufacturer and a distributor, a customer and its invoicing agent, a vendor and a transport service provider. So why the relationship categories exist? They help SAP understand what kind of link exists between two business partners, what roles each partner plays, which business process it affects, like a purchasing, sales, finance, etc. So example of relationship categories: BUR001 contact person relationship, BUR002 has the bank, BP001 company subsidiary, BP003 vendor manufacturer, BP004 customer payer, BP005 employee relationship. Relationship categories control which role can be assigned to each side. So example scenario, vendor ABC manufacturing, the bank State Bank of India. So the relationship category BUR002 as the bank. So this includes ABC manufacturing as SBI as its banking partner. SBI details can be used in payments. Where used in SAP? Relationship categories are used in BP master data, business partner master data, procurement and sales processes, MDG master data governance, FI payment transactions, FI payment configurations, CRM relationship mapping. Fifth one is configuration path. Under the SPRO, go to cross application components, SAP business partner, then business partner, basic settings, relationships, define relationship categories. Here you define technical name, example BUR001, relationship direction, one way or both directions, allowed BP roles, buying and selling, and contact persons, etc. So the next field is presentation of relationship overview. In SAP S4HANA Business Partner, presentation of relationship overview is the screen or view where the system displays all active relationship that a business partner has with other business partners. It is a summary display allowing the user to quickly understand who his BP is connected to, what type of relationship exists, which BP is on the other end, role, example, contact person, payer, parent company. So validity dates, where you see it in the business partner transactions, business partner tab, overview screen. This overview shows a list of rows, each represents one relationship. So the typical fields you will see the field relationship category, type of relationship, for example, contact person has bank, business partner number, the BP linked in this relationship, partner name of the other party, description, details of the relationship, validity from and to, relationship validity period, direction, whether the relationship work one way or both ways. So example business partner ABC Manufacturing Private Limited, relationship overview might show the relationship category is contact person BUR001, other BP 10002, meaning Mr. Kumar, has bank second relationship BP 200010, State Bank of India, subsidiary BB003, and other BP 1000075, ABC Global LLC. This arrives a complete picture of how this BP interacts with the others in the business system. The purpose of the overview, this screen helps users understand business partner network quickly, manage master data more easily, modify or add relationships, troubleshoot documents, for example, missing payer, maintain accurate customer or vendor hierarchies. So begin the scenes, the technical, data stored in table BUT050, relationship categories defines in table, TB is at 9A, BP roles affect what relationship are allowed. So these are all the field which we discussed under the relationship in our vendor master. So now the entire vendor master data, each and every field we discussed in detail. So what is the definitions, the purpose, where you see it, what it represents. So we discussed elaborately one by one in vendor master data, like a general data, company code sections, purchasing sections. So we discussed all the three sections. So you can see from the day one video, start with general data address until relationship. Every day I published one video under the general data, company code and purchasing. So I covered end to end in the vendor master. Each and every corner of the field I discussed and I explained elaborately. So thank you for your support and patience to listen the entire video from day 1 to today. So probably you can understand detailedly about end to end in vendor master. So if you have any questions, any support required further, definitely you can contact me through my email ID at any time. So thank you, all the best. We will see you once again. Bye.